Good morning, students. Welcome you all once again on live virtual classes organized by Board of Studies of ICAI. I am CA Dr. Alok Garg, and today I am going to speak on Ind AS 20. I'll take class on Ind AS 20, Accounting for Government Grants and Disclosure of Government Assistance. So, students, this is not a new standard as far as government grant is concerned. So, when I say government grant, means this is something where subsidies, grant, relief, which is provided by the government to an entity. So when I say government grant, so we have AS 12, Accounting Standard 12 in our old accounting standard. And when I say new IAS, I mean to say new Ind AS, so it is Ind AS 20. But the thing is, the title is something different. So Accounting Standard 12 was talking about your only accounting for government grants, but this standard is talking about accounting for government grants and disclosure of government assistance. Okay, so now you need to tell me what is difference between government grant and government assistance. Grant and assistance, do you find any difference between these two words, government grants and government assistance? Yeah. So of course, we are going to discuss about this thing. Okay, what is government grant and what is government assistance? So before moving on to this part, so let me talk about. I hope what is difference between, and my voice is also audible to everyone. I hope so. Please confirm. So friends, this standard is talking about accounting for government grants. So this standard talks about two things. One is government grants and the second one is government assistance. So when I say government grant, the objective of this standard or this standard is talking about accounting for government grants as well as disclosure of government grants, means if a government is providing to an entity an asset free of cost or an asset at a concessional rate, in that case it is a government grant, and this standard talking about how this grant is going to be recognized in the books of accounts, how this grant is going to be measured, and what will be the relevant disclosures. But when I say government assistance, okay, grant is also assistance. Then what is the difference between government grant where accounting and disclosure is there? And in case of a government assistance, the accounting is not given. So this standard does not talk about the accounting of government assistance. This standard only talks about the disclosure of government assistance. Okay. So when I say disclosure of government assistance, so this government grant, which we are talking here, it has some value. Like government has given a land free of cost, but the land has some value. Okay. Or the government has given a concession on the purchase of land. For example, the land is worth 50 lakhs, but the government has given a concession of 20 lakhs. Okay. So it means 20 lakh is a government grant. Okay. So guys, when a government is transferring some resources to the entity and that resources had some value, it is known as a government grant, and where the accounting and disclosure comes into play. But if the government is supporting to an entity or a government is supporting to an industry at a large, okay, for example, the government has just to promote the pharmaceutical industry. So government has just provided the open bidding forum, or government has given a tender platform at a free of cost to all the pharmaceutical companies. Okay, so in this case it is just like a government assistance. Okay, so if government is providing a assistance, like government is providing a platform between the supplier and the customer, okay, to the entities who are operating into a, let's say, remote areas. Okay, so this is a government assistance. You cannot arrive at a value that what is the value if the government is providing such assistance to the industry at a large. Okay, so this is known as a government assistance. So government assistance is that kind of grant which does not have a value, whose value cannot be measured. Okay, and that is why That is why for in case of a government assistance, only disclosure is required. And this part is a new part. This part is a new part which was not there in accounting standard. Okay. Value can't be measured for government assistance. So students, I believe the objective is clear to all of you. Okay. Understood? Yeah. Good morning, Fernandez. Good morning, Shraddha. Good morning, Radha. Himanshu, Pulkit, Shobit. Good morning, everyone. Great. So students, let's move to the agenda now. What will be the agenda for this particular standard? Okay. So let me share my screen. I hope my screen is visible. Yeah. So coming to the agenda, of course, we are going to discuss about the objective and scope. So we have discussed the objective just now. The objective is to provide the accounting and disclosure of government grants and provide disclosure of government assistance to an entity. Okay. So this standard is talking about two things. One, it is talking about accounting and disclosure of government grant. And second, it is talking about the disclosure of government assistance. When I say government grant, as far as the standard is concerned, so government grant means the grant which have some value, whose value can be reasonably ascertained, whose value can be measured. But when I say government assistance, it means support. It means support. I'll take a classic example. To bifurcate or to make you guys understand the difference between government grant with the respect of this standard and government assistance with respect to the standard. For example, I am a government. Alok is a government. Okay, or Alok is a government body. So there is a CA student, okay, who is from a very humble background or who is very financial, who is having a very weak financial background. Okay. So let's say I am a government and I am providing books free of cost to that CA CA student. Okay. So when I am providing books free of cost, although I am providing books free of cost, but the books has some value. Okay. So it is known as a government grant. Or let's say I am depositing the examination fee on behalf of that student still. So the examination fee has some value, for example, 2,000 or 3,000 rupees. Okay. I am depositing on his behalf. So again, it means it is a government grant where it has some value. The second one. So I am motivating that CA student. Okay. I am inspiring that CA students. I am advising CA students how to do the studies. Which topic has to be selected for first reading, which topic has to be given less priority. Okay, so I am advising the CA student to get the classes from which teacher, which faculty. So I am doing all this stuff. So when I say I am doing all this stuff, so it means I am providing a support to that CA student, kind of a moral support, kind of a physical support. Okay, so I am providing an assistance to that CA student. And these assistance, this support cannot be measured in a value. Okay. So what does it mean? It means this is a government assistance whose value cannot be measured and hence disclosure is required. Okay. But in the first case, when I am providing books to that CA students, when I'm depositing examination fee on the behalf of the CA student, so it is kind of a government grant whose value can be measured. And that CA student can say that this government or Alok has given me, Alok has supported me for more than 20,000 rupees. Okay. In terms of my books, in terms of examination fee, etc., etc., etc. Okay. And he can also disclose. Okay. So first he is saying that कि उसने मेरी 20,000 रुपए की मदद की, help की. And second, he can say that he has also supported me very well in advising how to do the study for examination, how to do the revision, from which teacher classes can be taken, so from which faculties we have to go. Okay, whether we have to go to ICAI, we have to go to anywhere else, so whatever. So I have supported him. So this is kind of a government assistance. I hope you guys are clear about the government grants in terms of this standard, which talks about accounting and disclosure, and government assistance, which only talks about disclosure. Accounting is not required because accounting is something which can be measured in terms of numbers and which can be recorded in the books of accounts. Yeah, guys, all clear so far? Okay, thanks. Objective is clear. Scope, we will discuss about the scope. Okay, so which government grant is included, which is not included. When I say scope, this standard is given a negative list. Negative list means all the assistance provided by the government is included in this standard, except there are 4-5 things which is not included. Okay, then we are going to discuss about what is the meaning of government grant. So first we will discuss the objective. We discussed the objective already. Then we will discuss the scope. When I say scope, we will discuss what is out of scope. Okay, and what is out of scope apart from these 4-5 line items, everything is within the scope. Then we will discuss the government grants. Okay, we'll discuss the government grant. Then I will discuss the recognition and accounting. I'll discuss the recognition and accounting. Okay, so one is government grant, then I'll discuss the recognition and accounting. So when I say recognition and accounting, so I'll discuss when government grant is going to be recognized in the books of accounts. Okay, when can you say that yes, it is my income? Okay, because government has given me some support in terms of money, and this is my income, this is the benefit which is flowing into me. Okay, and we are also going to discuss about the accounting of government grants, that how this government grant is accounted for. Okay, then we will discuss about the non-monetary grants. If the government is not providing a money to the company, but government is providing an asset free of cost. Okay, then we will be going to discuss presentation, how this government grant has to be presented. And let me tell you, this presentation is also driven from the accounting. Okay, so we will discuss there are 2 kinds of presentation as far as government grant is concerned. Okay, then we will discuss, sir, for example, a government has given a grant, and you all are aware why government will give a grant. So government will give a grant to promote an entity in compliance with some conditions. Okay, so government is saying, if you will install your factory or plant in a remote location, in that case I'll give you a subsidy. Okay, or let's say I'll give you a land, 50,000 acres of land at 25% price. Okay, so why government is providing such benefit to the company? The government is providing such benefit to the company in lieu of, if the company will come to the remote location, of course it will generate employment, it will generate livelihood. Okay, because if a big plant will come to a small town or a remote location, so many ancillary industries will come into play. Okay, for example, if that big factory has 1,000 employees, of course there will be so many grocery shops, vegetable shops, fruit, milk, vegetable. Then there is a need of school, then there is a need of electricity things. So everything which is related, which is the need of human being, will be required. Recreation facilities. Okay, so when a big company or a big plant will come into remote location, so that town or that area will be developed automatically. So this is the condition. So if the company is not meeting the condition, of course this government grant will be repaid. Okay, sir, if the government grant has not been attached to any condition, then of course repayment does not comes into play. Okay, so we will discuss, in case the government grant has to be repaid after 2 years or 3 years, then what will be the accounting. Then we will discuss government assistance, and so far we have discussed government assistance, that what is meant by government assistance. And we are going to discuss the difference between AS 12, old accounting standard, which you are well versed with, and Ind AS 20. Okay, then we are going to discuss some disclosures. Okay, guys, I hope agenda is clear to everyone. Yeah, Fernandez, Shraddha, Radha, Vijaya, Pulkit, Sobit, agenda is clear to everyone. Now let's move forward. The objective we have discussed. The objective is to provide accounting requirement for government grants and disclosure for government grants and disclosure relating to government assistance. Now coming to the scope part, very important guys, scope part. Okay, So this government grant, as the name suggests. So Shraddha, if a private company has given something free of cost to another private company, whether this will come under the scope of Ind AS 20? Guys, my question is, if a private limited company gives something free of cost to another private limited company, whether it will cover under Ind AS 20? Second example, Karnataka government gives an equipment free of cost to a private limited company, whether it will cover under Ind AS 20? Whether it will cover under Ind AS 20, guys? So Radha is saying no. Shobit is also saying no. Why? Why no? Because this is a private limited company, sir, and the title of the standard is government grant. It means if it is provided by the government, then it will be covered under this particular standard. Otherwise, it will not be covered. Okay. So very fair. Okay. To the point answer. In the second case, sir, it is provided by the Karnataka government, and hence Karnataka government is a state government, and they are providing the asset free of cost to the company, and hence this is a grant which is come under the purview of Ind AS 20, and hence Ind AS 20 will be applicable. Very fair, very good, clear. Yeah. So guys, this standard is applicable to government grants and other form of government assistance. So other form of government assistance, I told you, this standard also includes the government assistance. Okay. But there is a negative list which is given in the standard. This standard does not apply to. What does it mean? What does it mean? It means negative list is given. Negative list. You all know, na, in GST there is a negative list, means everything will be included except this. Okay. Like your parent says that you have to do whatever you want to do except 2-3 things which you are not required to or you are not supposed to do. Okay. So likewise, in Ind AS 20, the negative list is also given. So what is the negative list? First, income tax related assistance will not cover under Ind AS 20. Sir, what is this? Income tax holidays. Have you heard about IT Park, Software Technology Park, Section 10A, 10B, 10C, 80 IA, IB, IC? If the company is, let's say, setting up its plant in a remote area, the government will provide 10-year tax-free holiday, 5-year tax-free holiday. Okay. Or let's say if a company is engaged in the formulation of COVID-19 vaccination, so the government will, let's say, the government will not tax the revenue, whatever is generated from the COVID vaccine. Okay. So guys, likewise, so I'm just taking an example. If the government is providing any income tax related assistance, okay, so assistance is a bigger word. So let me clear to all of you, assistance is a bigger word which include grant, okay, which include grant. If the assistance can be measured in a monetary terms, it is a grant. If the assistance cannot be measured in a monetary term, it is treated like a government assistance only with respect to this standard. Okay. So sir, if this standard is not covered here, then when, income tax related assistance is not covered here, then where it will be covered? So it will be covered under Ind AS 12, income taxes standard. Okay. So whatever income tax benefit is provided by the government, that will be treated under Ind AS 12, that will not be treated under Ind AS 20. Biological assets. Sir, if a grant is related to biological asset, please remember, I have taught you Ind AS 41, agriculture standard. And I have taught you the government grant also. So this Ind AS 41 includes the accounting related to biological asset, the accounting related to agricultural produce, the accounting related to government grant, which is related to agricultural produce or biological asset. Okay. So if the government is providing a grant with respect to agricultural asset, in that case, Ind AS 20 will not be applicable. Then sir, which standard will be applicable? Ind AS 41 will be applicable. Third, government participation. What is meant by government participation? For example, government is promoter or owner of a company. Can you name the company where government is a promoter or owner? Delhi Metro Rail Corporation Limited, DMRC. When you see the balance sheet of DMRC Limited, so you will see in the equity share capital part, you will see the equity of this much is governed by the Lieutenant Governor of Delhi, and this much equity is governed by the President of India. Okay, it means who are the promoters of Delhi Metro Rail Corporation? So central government and state government are the promoters. So what does it mean? It means government is the owner of a company. Air India, government is the owner. ONGC, BPCL, NTPC, Steel Authority of India Limited, MMTC, who are the owners? So in case of public sector undertaking, government is the owner. And if the government is the owner, okay, government is the equity shareholder, and government is giving some benefit to the company, so it will not be considered as a grant, it will be considered as a deemed capital contribution. Okay guys, so government participation is also outside the purview of this standard, where government is the shareholder, where government is the owner. If the government is the owner, then this will not included in the standard, like in case of public sector undertaking. Clear? Accounting for government. Fourth, accounting of government grant reflecting the effect for changing prices. For example, so the prices are increasing. For example, the crude oil is increasing, and due to the increase in crude oil, I'm just taking a hypothetical example, although it is related to practical thing also. For example, if in international market, if the price of crude oil is increasing, and due to the increase in the prices of the crude oil, the prices of the petrol is also increasing, for example. Okay. So due to the increase in the prices of the petrol, although there are some industries which is using the petrol as a raw material, okay, for the manufacturing, okay, and due to the increase in petrol prices, there are some industries which is getting a damage, or some industries are facing very difficulty to survive, and the government has just controlled the price to remove this problem, and the government has controlled this price, and government has said that for this particular entity you need to sell the petrol at not more than, let's say, 60 rupees or 70 rupees. Okay, so government is controlling the price change. So government is providing a relief to industry just with respect to the effect of changes in prices. So it will also not be covered here. Okay, so it will not covered. It is not a government grant which has to be covered under this particular standard. Okay, so guys, this is also out of the scope. I hope these four things are clear. First, income tax related assistance is not within the scope of this standard. Agriculture asset grant is not within the scope of this standard. If the government is the owner, promoter, or equity shareholder, and government is participating in that entity, and government is providing some benefit, it is not applicable in this standard. When the government is providing some assistance with respect to controlling, with respect to removing the impact of the price changes to a particular set of industry or a company, it is also not covered under this particular standard. Okay, is it clear to everyone? So guys, now we are moving to the next padao. So Shraddha, if the government has some equity, okay, if the government is, let's say, investor, or let's say government is a investor or a venturer or a let's say or a parent, okay, if government has some equity and then government is providing the benefit, again it will not be covered as a government grant. Okay, so even it is less than 50%, still a government could be a joint venturer, because in lot many cases the government could be a joint venturer. Okay, like in case of ILFS, and there are lot many projects where you must be heard about ILFS, Infrastructure Leasing and Financial Services Limited. So they were doing all the projects. They were creating a special purpose vehicle where ILFS has a 50% interest, or let's say 60% interest, and government has a 40% interest. Okay, so even in this case where government is a promoter, it will be considered as it will not be covered under this particular standard. Okay, so the standard does not talks about that the government is a owner, or let's say government is a holding company. It does not talks about that. It talks about the government is a equity owner, or government is a equity participant. Okay, yeah. Now coming to the definition of government and government grants. Sir, who is government? Shraddha, I hope it is clear to you. So nutshell, if government has a strategic investment in any company, in that case, it will not be covered under this standard. If government is not having a strategic investment, but the government is having a passive investment, means like government has invested just 2%, 1% in a company. Okay. So Vijaya, it is not covered under this particular standard because the government is providing a relief to the industry. Okay. So in this case, it may become as a notes to disclosure in the notes to accounts. It is not covered under any standard. So it is governed by the general accepted accounting principle, and general accepted accounting principle says that if there is any relief to the company, there is any support to the company, something major has been announced for a sector or an industry, in that case it has to be disclosed in the notes to accounts. For example, COVID related disclosure. Okay, so most of the companies has given COVID related disclosure even though impact was not there. Okay, so it is not covered under any particular standard. So guys, who is government? Tell me with your common sense, who is government? Please don't see the slides. Tell me who is government. Tell me who is government. Guys, who is the government? Tell me, government includes what? Who is government? Yeah. Pulkit is saying central government. Yeah. What about others? State government. Okay. So who is government? Yes. Central government. Of course. Government of India. You must have seen. At some places it is written the government of India. So through President of India. When I say state government, through Lieutenant Governor. So government includes central government. Government includes state government. State government. Yeah. Okay. Sir, whether MCD, Municipal Corporation of Delhi, Municipal Corporation of Ludhiana. Okay. Sir, whether MCD is a government? Yes, MCD is a government body. Okay. Sir, whether NDMC, New Delhi Municipal Corporation is a government? Yes, it is a government body. It is a government body. So standard says the government includes central government, state government. Okay, central government, state government, government agencies, Reserve Bank of India, Insurance Regulatory Development Authority. Okay, and similar bodies, bodies, whether local, national, or international. So all are covered here: local, national, international. Local, national, or international. Okay. So guys, the government includes central government, government of India, state government. Let's say government of Jaipur, government of Rajasthan, government of Karnataka. Okay. So government of Maharashtra, government agencies like Reserve Bank of India. Okay. Similar bodies like Municipal Corporation of Delhi, New Delhi Municipal Corporation. Okay. Similar bodies like local, national, or international. International, for example, World Health Organization. Again, it is an international. It is an international government body. Okay. So these are considered as a government. These are considered as a government. Okay. Clear, guys? Clear? So government refers to the central government. Government refers to the central government, state government, government agencies, and similar bodies, whether local, national, or international. Whether local, national, or international. Okay. Now, sir, what is government grant? What is government grant? So, guys, why government is giving a grant? Whether government is giving a grant to everyone? Whether government is giving a grant to everyone? Fernandez is asking, sir, is the government grant given to be repaid back when the conditions are not fulfilled by the company or the beneficiary? Yes, Fernandez. If the entity will not comply with the conditions which is given by the government grant has to be repaid back. Okay. And we will also discuss the accounting part of it. Yeah. Yes. So what is government grant and why government is providing a grant? So government is providing a grant in compliance of fulfillment of some conditions. Okay. So government grant are assistance by government in the form of transfer of resources. Of course, I have told you that all the assistance, so all the grant are assistance, and the assistance which can be measured in terms of money is known as a government grant, and the assistance which cannot be measured in terms of money, they are required to be disclosed. So government grants are assistance by government in the form of transfer of resources to an entity, So what is a government grant? Of course, it is assistance where the resources are transferred. Okay, transfer of resources to an entity. But why government will transfer the resources to one entity and not to everyone? Why? In return for past or future compliance with certain conditions. Of course, the entity has to fulfill certain conditions. For example, if the entity will, if the hospital will treat all the COVID patient, in that case, whatever expenses is there, that has to be borne by the government. So what is the condition? The condition is hospital has to treat the COVID patient. Okay. The school has to teach at least 100 weaker section students. If the school will teach at least 100 weaker section students, the government will provide a grant. Third, if the company will install its plant in a remote area, the government will provide a grant. If the company will generate at least 1,000 employment in a year, the government will provide a grant. Okay. So guys, what is a government grant? It is an assistance by government in the form of transfer of resources to a company, to an entity, in return for past or future compliances. Either the entity has complied the condition in the past, or the entity will comply with the condition in future. So at times the government will provide the grant in advance, or at times the government will pay the grant as a reimbursement because the entity has already provided the condition, complied with the conditions relating to the operating activities of the entity. Okay, is it clear? So two things are there in government grant. One is transfer of resources by the government. Why? Because the entity has complied with some certain conditions in the past, or the entity will comply with certain conditions in the future. Okay. I hope it is clear to all of you. So government grant exclude those government assistance which cannot have a value and cannot distinguish from normal trading transaction. So government grant exclude those government assistance which cannot have a value. That is why I have told you those kind of assistance are only disclosed in the notes to accounts, and accounting part will not be there because there is no value and cannot distinguish from normal trading transactions. Okay, for example, there is a private limited company, and the private limited company is selling its good to the customers. Okay, and they are selling the goods to the customers at 10 rupees. And the government is also customer of that private limited company. The government is consuming 60% of the production of that private limited company. So it is a normal trading transaction. It is not a grant. It is normal trading transaction. Okay. Like other customer, like Tejal is a customer, like Shraddha is a customer, like Fernandez is a customer, government is also a customer. As simple as that. Okay. I hope you guys have understood. I hope you guys have understood. Yeah. Priti is asking, Does it includes foreign government also? Yes, Preeti, it includes foreign government also. So it includes central government, state government. Okay, it does not says that it includes central government of India. It does not. It includes state governments of India. It only says that central government, state government. Okay, if the company is getting a grant from UNESCO, from WHO, from US Embassy, again it is a government grant. Okay, yeah, right, Vijaya. Guys, I hope you guys are clear so far. Okay, so these were the basics. These were the basics. Example of government grants. So grant received from government against reimbursement of expense. So the government, the entity has already complied with the conditions, and now the entity is asking for the grant. Okay, the grant could be against expenses. Okay, so the entity has to fulfill. Government has told that please come to this location. Please start your business. We will support you. So whatever your operating expenses will be there, we will provide you the support in terms of operating expenses. So the government is transferring the money every quarter to the account of the company. Okay, so government grants could be against reimbursement, could be against expenses, or it could be in lieu of the fulfillment of certain conditions. Okay, when you fulfill certain condition, then we will give you the grant, or I am giving you grant, but you have to fulfill certain conditions. Okay, so in this case, Ind AS 20 will be applicable. So examples could be subsidy given by the government for procurement of material, free allotment of land by the government, forgivable loan. So this is a new concept in this Ind AS. Okay, so this concept was not there in AS 12. What is meant by forgivable loan? So the government has provided a loan to the entity, and the government has told that entity, if you comply with certain conditions, then after 5 years, I will forgive this loan. You must have heard in the news, the government has waived off the loan to the farmers. Okay, you must have heard this news. If you have gone for the bank audit, okay, then you have seen that the government has waived the loan of the farmers. The government has waived the loans of this particular set of entities. Okay, so forgivable loans means the government will give the loan, and after compliance with some certain condition, the government will forgive the loan. As simple as that. So standard says that if the government is providing a loan to an employee, to an entity, and after compliance of certain condition, if the company will comply with the certain condition, the government will forgo the loan, forgive the loan. So this loan will also be treated as a government grant. Interest-free loan or at a concessional rate. The market rate of interest is 10%, and government has given a loan at 5%. So it is also, this 5% is also considered as a government grant. So guys, for example, the government has given a loan at 10 lakh rupees, and the market rate of interest is 10%. Okay, and government has given it 5%. So the difference between 10% and 5% has to be treated as a government grant. Okay, and how this loan has to be measured? The loan has to be measured as per Ind AS 109, as per the Ind AS 109. So you have to do the amortized cost calculation, what you have read in Ind AS 109. Okay, so that the concession is treated as a grant in this standard. Yeah, Shraddha is asking, sir, free of cost services provided to COVID patient in hospital, is it government grant? Not the vaccination. For each patient, it is government grant. Shraddha, first of all, you need to understand to whom this standard is applicable. This standard is applicable to the companies. Okay. So for example, there is a Max hospital or a Vedanta hospital, and government is saying, if you will provide the free of cost services to the patient, then we will give you a grant. For example, we are providing you 1 crore rupees, and you have to provide free of cost services to all the patients. In that case, for the entity, whatever amount the entity is receiving, it is considered as a government grant. And Shraddha, if the company is providing, for example, Vedanta Hospital is a private limited entity. If Vedanta Hospital is providing a free of cost services to the COVID patient, it is a corporate social responsibility. It can be covered under CSR. Understood, Shraddha? So please try to understand. If a company is providing free of cost services to the patient, it is not a government grant. It is a CSR. But if something is received from the government, if assistance is received from the government, it is a government grant. Yeah, clear, Shraddha? So we are talking about the transfer of resources from the government, central government, state government, municipal corporations, okay, like national bodies, international bodies, local bodies, okay. We are only talking about government. And we are talking about if these resources are provided to the entity. When I say entity, it is a company on which Ind AS is applicable. Yeah. Guys, shall I move on? Yeah. Now coming to the recognition part, sir, when a government grant has to be recognized, when you say government grant, for example, the company is installing its plant into a remote location. Of course, the company has to purchase the land, the company has to build the factory, okay, the company has to build the infrastructure, the company has to bear the operating expenses. These all capex and these all opex belongs to the company. But since the government is providing a grant, then what is it? It is an income for the company, of course. Of course, it is an income for the company. Okay, it is an income for the company. For example, you want to go for a coaching class, and I have told you that please don't go for coaching class. I'll teach you. So of course, you have to spend the money for getting the tuitions from XYZ. But I have told you, since I'll teach you, so of course you have saved that money. You have saved that money. So what does it? It is a government grant. It is a benefit to you. It is a benefit to you. Okay. Second, I am reimbursing you. Oh, this is your job. You have to pay. If you have to get the tuition, you have to pay. But I am reimbursing you. What does it mean? It means it is an income for you. Either you can deduct your expense as a zero, either you can show your expense nil, expense minus income, or you can show this money as an income. Although I was responsible for paying this, Shraddha is saying, sir, I am responsible for paying this, but since you have paid me, so it is an income for me. Am I right? So standard likewise says that government grant should not be recognized until there is a reasonable assurance that entity will comply with the condition and grant will be received. Guys, please see, this recognition condition is a negatively framed. I don't know why standard framed these kind of sentences. They can say that government grant shall be recognized. They can say that government grant shall be recognized when there is a government grant shall be recognized when there is a reasonable assurance. So they are saying government grant should not be recognized until unless. So why to say until unless? So instead of saying this, we can say that government grant shall be recognized when there is a reasonable assurance. When there is a reasonable assurance that entity will comply with the conditions and grant will be received. Okay. So what are the two conditions for recognition of government grant? The two conditions are recognition of government grant. Recognition of government grant. So when the government grant is going to be recognized? When there is a reasonable assurance. When there is a reasonable assurance. Reasonable assurance of what? Reasonable assurance of entity will comply with the conditions. Entity will comply with the condition and grant will be received. And grant will be received. So two things are there. One, entity will comply with the condition, and second, the grant will be received. Okay. In that case, government grant will be recognized. Sir, the entity has already complied with the condition. Then, of course, if the entity has already complied with the condition in the past, and it is reasonably assurance and it is reasonably certain that the grant will be received, in that case, it can be recognized as a grant in the books of accounts, even on the accrual basis. So receipt is not important, guys. Receipt is not important. Sir, the government has given money in advance. Okay, so we have received the money. Can we recognize a government grant? Shraddha, Tejal, what to do? Fernandez, what to do? What to do this? So the government has given the money to the company. Okay, so the company has received the money. So can the company upfront recognize the government grant? Because what is the fundamental principle? The fundamental principle is, I have told you, so whatever OPEX and CAPEX need to be incurred, this is your responsibility, not the government responsibility. Government is providing a benefit to you and it is an income for you. So this standard talks about that if there is a government grant, it will go to P&L. Now the mudda is, now the question arises, sir, whether it will upfront go to P&L or it will go to P&L over a period of time. Okay. Like accounting standard 12, there is no concept of grant in the nature of capital contribution or the grant in the nature of promoter contribution. There is no such concept. In Ind AS, there are two kind of grant. One is revenue grant. I mean to say grant for the expenses. Second, grant for the assets. Okay. So in Ind AS only there are two kind of grant. One is grant related to asset. Second, whatever grant the company is receiving apart from or which is not related to asset will be treated as a grant related to revenue, grant related to expenses. Okay. And every grant has to be recognized in profit and loss account, has to be treated in the profit and loss account. Okay. Either upfront or over a period of time. Of course, in balance sheet, it has to be recognized as a liability. Okay. In the balance sheet, it has to be recognized as a deferred grant, but it has to go to the P&L at the end. Okay. Now the question arises, okay. So now my question was, if the government has given money to the company has received the money in its bank account, the company will recognize the government grant and recognize this thing into the P&L? Answer is no, guys. Answer is no. Why? Because two conditions are there. First condition, there is a reasonable assurance. There is a reasonable assurance that the grant will be received. Sir, grant has already been received. Second, entity will comply with the conditions. Entity will comply with the condition. Sir, entity is reasonably assured that the entity will comply with the condition. But the grant has to be received from the Municipal Corporation of Delhi, MCD. And MCD guys are fighting with the central government. And they are saying that we don't have money to pay to our employees. You must have heard in Delhi. So few months back, these MCD employees went on the strike. And nobody is cleaning the street of Delhi. Okay. There was a lot of garbage which was spread over the roads or street of Delhi. Okay. So these guys are saying we don't have money. So Mr. Kejriwal is saying we don't have money to pay the employees of the MCD. So guys, if a local body who is giving a grant is like a bankrupt, or let's say they don't have money and the entity is reasonably not certain that whether we will be able to receive the money or not, because first they have to serve the society, they have to serve the employees, then our number will come. So that the entity is reasonably not sure because no one is entertaining their claim. Although they have complied with the condition, even in that case, it will not be recognized. Second, the money has already been received, but the entity is not certain whether they will be able to comply with the conditions or not. Okay. For example, government has told that you have to generate 500 employment in a year. But they are operating in an Excelite area. Okay, they have installed their factory in an Excelite area, and no one wants to come there. Or probably the infrastructure has not been built. Like the train facility is not there, the connecting transport is not there. Okay, so that is why no one wants to come there, and the entity has done all the reasonable steps to generate the employment, but except few person, no one is coming there. So they are not reasonably assured that we will be able to generate 500 people in a year. Okay. So in that case, even though money has been received, but the grant will not be recognized. Have you understood this? So receipt is not important. If the money has been received, still grant will not be recognized. If the money has not been received, still the grant can be recognized. The two conditions will be there. First, entity will comply with the condition. Second, reasonably certain that the grant will be received. So guys, I hope you have understood the meaning of government assistance, meaning of government grant. Okay, you have understood when a government grant is going to be recognized. Yeah, let's move on. So when something is going to be recognized, then accounting happens. Am I right? In Ind AS 16, you have seen that. In Ind AS 16, you have seen that. First, we have talked about what is property, plant and equipment. Likewise, we have talked about what is government grant. Then in Ind AS 16 PP, we have talked about when PP is going to be recognized. Likewise, we have discussed when a grant is going to be recognized. So the first mudda is, the first principle is, you need to understand, sir, is it going to be recognized as a government grant? If it is going to be recognized as a government grant, then the accounting will come into play. Okay. So now we have decided, yes, this item has to be recognized as a government grant. Now where to recognize? At what value it is going to be recognized? So once recognition happens, then accounting, when I say accounting, it includes measurement, it includes measurement, and it includes presentation as well. Okay. So government grant is recognized in profit and loss. I have told you the ultimate destination is, it is an income. It is a P&L item. It is a P&L. So getting a tuition, getting a books, paying the examination fee is your responsibility, guys. It is not government responsibility. But if government is giving you free of books, free of cost, government is reimbursing you examination fee, in that case, this is a upside for you. This is a benefit for you. And if it is a benefit, it has to go to P&L. Now the question arises, sir, today or over a period of time. So standard says that the government grant has to be recognized in profit and loss for the period. Sir, which year profit or loss? For the period in which expenses for which grant received had been recognized on a systematic manner. Sir, can you take an example for this? For example, the company has received a grant in relation to a fixed asset. The company has received a grant in relation to a fixed asset. Okay. The company has received a grant in relation to a fixed asset. When I say fixed asset, for example, the fixed asset, just a minute, I think I'm getting a problem here. So let me write down with this. I hope my voice is audible to everyone. Guys, let me know if you're facing any problem. I hope I'm audible to everyone. So Shraddha is asking, sir, if no condition is attached to the grant, then no need to check first condition. Bang on, Shraddha. If there is no condition, of course, you are not required to see the first thing. Okay. In that case, if there is a reasonable assurance that the money will be received, or if the money has already been received, it will upfront go to P&L. Okay. Fernandez is asking, sir, one doubt. In the first condition, it means it is not after fulfilling the condition grant to be recognized, but if the company gives assurance to comply is sufficient to recognize. Am I right in my understanding? So Fernandez, if you see the standards, for example, if you have read Ind AS 12, it says that deferred tax asset is going to be recognized when there is a probability that this asset will be realized. Okay, this asset will be realized. Okay. So the standard talks about probability. The standard talks about virtual certainty. In accounting standard 20, I am talking about old accounting standard. It says that deferred tax asset is going to be recognized when it is virtually certain. When it is virtually certain. When there is virtual certainty and convincing evidence that the DTA will be realized. So the standard talks about because we are living in a practical world. Okay. And we are also following a principle of prudence conservatism, and accrual. Okay. So friends, you are reasonably sure that yes, let's say my company is in demand, I'm paying a good remuneration, and I know that 500 600 people are joining me every year. I have an annual operating plan also, I have my budget also, and I know that so I have a demand of 1000 employees, so at least I will be able to hire 500 600 employees. Okay, 500 600 employees. So guys, if the company is reasonably sure that we will be able to comply with the condition, in that case grant will going to be recognized. But a disclosure will be required that if the in future, due to unavoidable reason, if the company will not be able to comply with the condition, this grant could be returned back to the government. Okay. Shraddha is asking, sir, in case of asset grant, if it recognizes in P&L, will it show true picture of asset, because for which that no much cost is incurred by the entity? Shraddha, I'll come to that. Okay. For the time being, just park your question because I'll cover this portion. Okay. So I was discussing, I hope my Excel file is visible to everyone. I hope this. Yeah. So standard says that grant has to be recognized in P&L in the period in which the expense relating to the condition, okay, in which the expenses has been incurred, which is relating to the condition on a systematic basis. Okay, for example, there is a fixed asset purchased. First April 2016 for 50 lakhs. Okay, and life is let's say 10 years. Okay, and the government has given grant of 20 lakhs. Okay, so government has given a grant of 20 lakhs. So standard says that in this case there are two options. We will discuss again. So in this option one, the asset has to be shown at nominal value or at a net value, means 50 lakh asset, cost incurred 50 lakh minus grant 20 lakh. What is the net cost? What is the net cost of the asset? 30 lakh. What is the life? 10 years. Okay, the life is 10 years. Then what is the depreciation every year, Shraddha? Depreciation is 3 lakh per annum in the P&L. Am I right? This is the first approach. Second approach, standard says that if you are showing the asset at 50 lakh, okay, you need to show the grant as a liability. So you need to show the grant as a deferred grant. Okay, 20 lakhs as a liability. Now this asset will be depreciated every year. What will be the depreciation, Shraddha? Depreciation is 5 lakh per annum. 5 lakh per annum. Okay. So standard says that this 20 lakh is also going to be recognized in the P&L on a systematic basis, in which the expense is going to be recognized. So in this case, this 5 lakh per annum expense is going to be recognized. This 50 lakh has to be depreciated over a period of 10 years. So in this case, this 20 lakh is also recognized as an income over a period of 10 years. And what will be the accounting entry? Deferred grant debit, because it is a liability when we have received. Deferred grant debit 2 lakh every year to other income, to income 2 lakh. To income 2 lakh. I hope this is clear to everyone. To income 2 lakh. Okay. So every year, what is the net impact in the P&L? So what is the net impact in P&L? Net impact is equal to 5 minus 2 is equal to 3 lakhs. And what was the net impact in P&L in the first case? It is 3 lakh. When we were following netting approach, it is 3 lakh. When we are following the gross approach, it is again 3 lakhs. Okay. I hope it is clear to everyone. Guys. Shraddha, I hope it is clear to you now. Yeah. So standard says that grant is recognized in profit and loss for the period in which expense for which grant received had been recognized on a systematic manner. Related contingent liability or contingent asset is treated in accordance with Ind AS 37. Sir, today we are reasonably assured, but what happens if tomorrow we will not be able to comply? So guys, that is why till the time the company is not able to comply the condition in full, the related contingent liability has to be shown in the notes to accounts. Okay. Any problem so far? Any doubt so far? Any problem? Any doubt? Please let me know if you have any problem or any doubt. Friends, yeah. Thanks, Radha. Let's come to illustration 1. Government gives a grant of rupees 10 lakh for past research of H1N1 vaccine. So it's a vaccination, it's a vaccine to A Pharmaceuticals Limited. There is no condition attached to the grant. There is no condition attached to the grant. Okay. So Shraddha or someone was asking, sir, if there is no condition, then whether the first condition needs to be checked. Of course, it is not to be checked. Examine how the government grant be recognized in the books of A Pharmaceutical Limited. So guys, government gives a grant of rupees 10 lakh. So government was very happy and they have declared that, so Mr. A Pharmaceutical Limited, you have done a good job in the past for this H1N1 vaccine. Okay. So this is a vaccine for some influenza probably. So government is giving 10 lakh rupees to the company. No further condition will need to be complied. So if no further condition will need to be complied, of course, nothing has to be shown as a contingent liability. And of course, if there is no condition, so the entire money has to be recognized in P&L immediately. No deferment, no straight lining, nothing. Yeah. Yes, Radha, you are right. Yeah, guys, clear? Any problem in illustration 1? Illustration 2. Guys, please don't see the solution. So government gives a grant of rupees 10 lakh for research and development of H1N1 vaccine to A Pharmaceuticals Limited, even though similar vaccine are available in the market but are expensive. So guys, government is giving a grant of rupees 10 lakh for R&D of this vaccine to a company, even though similar vaccines are available but are expensive. So government wants to come out with a reasonable solution. Okay. The entity has to ensure by developing a manufacturing process over a period of 2 years that the cost come down by at least 40%. See, the government has given a grant of rupees 10 lakh. Money has been received. Okay. Mr. Fernandez, Shraddha, Tejal, money has been received. 10 lakh rupees has been received. Sorry, 10 lakh. Okay. But what is the condition? The condition is to cut down. In market, the vaccine is available, but it is very costly. So the condition is cut down the cost by 40%. Okay, so that the society will get the medicine or this vaccine at a reasonable price, at a cheaper price. Examine and this cost should be cut down over a period of 2 years. Okay, so the entity has to ensure by developing a manufacturing process. So they have to build a process. They have to build a process in 2 years' time so that the cost should come down to 40%, come down by 40%. Examine how the government grant be recognized. Assume that A Pharmaceutical Limited has reasonable assurance that the condition attached to the grant to be will be complied with. So guys, there are 3 information given in the question. First, the money has been received for rupees 10 lakh. Second, the condition is to install or to conclude a manufacturing process over a period of 2 years so that the cost will be cut down by 40%. So that the cost will be cut down by 40%. Okay. Third, the company has a reasonable assurance that the cost will be cut down by 40% over a period of 2 years. So reasonable assurance is there. Now coming to the recognition criteria. So the entity will recognize a government grant if there is a reasonable assurance that the entity will comply with the condition and the grant will be received. So grant has already been received and there is a reasonable assurance that the condition will be complied with. So in this case, whether we need to recognize this 10 lakh rupees upfront or we need to recognize the grant over a period of 2 years. What is required to do? Guys, what to do? So what is the accounting entry for this? Should I talk about the accounting entry? What is the accounting entry? So the first entry, when the grant has been received, first entry, bank account debit to deferred income, to deferred grant, 10 lakh, 10 lakh. Second entry, at the end of first year, deferred grant debit 5 lakh to P&L as a income, P&L income 5 lakh. At the end of second year, same entry, 5 lakh, deferred grant debit 5 lakh to P&L income 5 lakh. Okay. So this will be the accounting entry, guys. Okay. This will be the accounting entry. If the company, since the company is doing a research to cut down the cost by 40%, of course, the company will also incur some expenses. So sir, instead of showing it into the P&L as a other income on the top line, can we reduce this from the expenses which have been incurred to make this process efficient? Yes, standard allows both the concept. Standard allows, if you want to adopt a gross approach, you can put this money, you can put this grant as a other income, and whatever expenses has been incurred for fulfilling the condition, you can show the expenses in the expenses side as a full. Second approach, you can net this grant from the expenses. For example, the expenses incurred is 4 lakh rupees. So you can make the expenses 4 minus 40 and 1 lakh rupees grant can be shown as a other income. For example, the expenses are 7 lakh. In that case, 7 minus 5, 2 lakh has to be shown as a expense. Okay. I hope all of you are clear on this. Yeah. Clear? Shall I move forward? Yeah. You're right, Vijaya. You're right, Tejal, Shraddha. You all are right. Illustration number 3. A village of artisans. You know what is meant by artisans? So artisans are those person who are engaged in the manufacturing of handmade articles. Okay. A village of artisans in a district got devastated because of an earthquake. A Limited was operating in that district and was providing employment to the artisans. So there was a village, and due to earthquake, the village was completely damaged, destroyed. And A Limited was a company who was operating in the district, and A Limited was providing employment to the artisans. The government gave a grant of rupees 10 lakh to A Limited so that 100 artisans are rehabilitated over a period of 3 years. And government has given a grant so that 100 artisans, 100 persons can be again start their life, can be again rehabilitated over a period of 3 years. Government releases 2 lakh rupees. Examine how the grant can be realized. So guys, first was a background that this earthquake came and the artisans got unemployed and this company is providing and generating employment to the artisans, okay, and the government gave a grant of rupees 10 lakh, okay, to A Limited, so that the 100 people can be rehabilitated over a period of 3 years. So the target was in 3 years 100 people has to has 100 people has to be rehabilitated, and the government, out of 10 lakh rupees, government has only releases 2 lakh rupees. So tell me whether this government grant can be recognized, and how this government grant will be recognized. Yeah, of course you need to see two conditions. First, entity will comply with the conditions, and second, grant will be received. These two conditions should be there. Entity will comply with the condition, and the second, grant will be received. So guys, if there is a reasonable assurance that the entity will comply with the condition and the grant will be received, in that case, this 10 lakh rupees has to be recognized as a government grant. Sir, do we need to recognize this 10 lakh rupees upfront at the time of beginning of the year? Do we need to recognize upfront or over a period of 3 years? So guys, it has to be recognized over a period of 3 years, okay, and the accounting entry will be bank account debit 2 lakh rupees. So bank account debit 2 lakh rupees, okay, and to government grant, to deferred grant 2 lakh rupees. Second entry, or you can say that bank account debit 2 lakh, grant receivable 8 lakh, to government grant, to deferred grant 10 lakh. Okay, understood? So this grant receivable will be come under an asset side, and this deferred government grant will come under the liability side. And this deferred government grant will be recognized as an income over a period of 3 years. And when the money will be received, this grant receivable will be knocked off from the money received. Accounting entry will be bank account debit to grant receivable account. Okay. So guys, if there is a reasonable assurance, the grant has to be recognized, but it has to be recognized over a period of 3 years in the P&L. Okay, sir. But if the entity will not be able to rehabilitate this 100 artisans over a period of 3 years, probably at the end of 3 years, this grant has to be repaid back. So guys, that is why in the first year, the entity has to recognize 1/3 of the government grant, and the entity has to disclose related contingent liability also. In the second year, the entity will recognize 67% of the government grant, and the entity will disclose the related contingent liability also. In the third year, if the entity will comply with 100% condition, of course, no contingent liability is required to be disclosed. Okay. And if it is not 100% at the end of the year, of course, a liability is going to be recognized for repayment of the government grant. And this grant receivable has to be reversed. Okay. Yeah. Shraddha, I hope I have replied to your question. In the second year, if there is, Shraddha is asking, sir, in the case, in the second year, there is reasonable assurance that condition cannot be fulfilled, they need to reverse it. Yes, Shraddha, you need to reverse it. Okay. Suyasi is asking, Suyasi has asked one question. In illustration number 1, how the government will come to know whether the company is using such a grant for the same purpose for which it is given? Suyasi, let me tell you with my personal experience. So, getting the money out from the pocket of the government is not easy. You have to submit a lot of documentation. Okay. So you have to demonstrate, you have to prove, yes, I have incurred these expenses for this particular project. Okay. You have to demonstrate that. You have to prove that. Okay. Clear? I hope it is clear to everyone. So we have done 5-6 examples. We have done 3 case study. So guys, now we need to discuss the concept of non-monetary grant. Okay. Now we need to discuss the concept of non-monetary grant. Sir, what is meant by non-monetary grant? Okay. So let me discuss about the concept of non-monetary grant. non-monetary grant. Okay. What is meant by non-monetary grant? Means the government is not giving a money to the company. Okay. There could be two scenario, friends. So first scenario is, for example, the company has purchased a machinery. The company has purchased a machinery. The company has purchased a machinery for 50 lakhs. And government has given a grant, I mean to say cash, of 20 lakhs. So what is this? This is a monetary grant. The government is giving money to the company. Am I right? The government is giving money to the company. So this is a monetary grant. Second one. Okay. So monetary grant. Second. Government is providing machinery free of cost. What is this? Shraddha, what is this? Government is providing machinery free of cost. Pulkit, what is this? Government is providing machinery free of cost. Government is not giving money. So it is non-monetary grant. It is non-monetary grant. It is non-monetary grant. Okay. So friends, if it is a non-monetary grant, then standard says that if it is a non-monetary grant, the government is giving some asset free of cost to a company. So standard says that in this case, there are two approaches which are available. There are two approaches which are available. What are those two approaches? What are those two approaches? So first, you need to recognize the fair value. You need to recognize the non-monetary asset at fair value. Okay. For example, the fair value of the machinery is 50 lakh rupees. Okay. So in this case, recognize asset and grant. Recognize asset and grant at fair value. At fair value. So in this case, what will be the accounting entry? In this case, the accounting entry will be machinery account debit. Bank will not be debit, guys. Machinery will be debit because the entity is not receiving money to deferred government grant 50 lakh. So what we have done, we have recognized machinery and government grant at fair value. Okay. So the first concept is fair value. Okay, fair value. And how this machinery and government grant will be knocked off with the books of accounts. So this is the first entry, first time entry. This, let's say the life of the machine. The life of machine is, let's say, 5 years. Okay, 5 years. So in this case, friends, depreciation you need to apply in day 16. Depreciation to accumulated depreciation or depreciation to machinery. 50 years divided by 5, 10 lakh rupees has to be depreciated every year. 10 lakh. And for the government grant, what is the accounting entry? Deferred government grant debit to other income. So how much amount? 50 lakh we have recognized in the government grant, and it has to be amortized over a period of 5 years, which is life of the asset. So 10 lakh rupees. Sir, we have received this machinery free of cost, and hence there should not be any P&L impact, right, Shraddha? Right, Fernandez, Pulkit, Shobit? There should be a zero impact in the P&L because this machine has been received free of cost and only we are recognizing at fair value. So there should be a zero impact. So in this case, net P&L impact will be, so the expense is 10 lakh every year. The income is 10 lakh every year. So the net P&L impact, what is the net P&L impact? 10 minus 10, 0. Okay. Right. 10 minus 10, 0. Sir, if a non-monetary grant is given by the government then the asset and grant has to be recorded at fair value. So this is the first approach. This is the first approach. Yeah, you are right, Shraddha. You are right. So in this case, there is no difference between Ind AS and accounting standard. Okay. So there are hardly 3-4 differences in Ind AS and accounting standard. I'll tell you. Okay, at the end of the standard, you are right. There is no much difference between Ind AS and accounting standard. There are only conceptual difference, like forgivable loan concept was not there in accounting standard. Okay, like the grant in the nature of promoter contribution concept was there in accounting standard, but it is not there in Ind AS. Okay, like a concessional rate. If the loan has been taken on concessional rate, so the market rate versus concessional rate, the difference is treated as a grant. So this concept was not there in AS 12. This is there in Ind AS 20. Okay, so that kind of differences are there. But as far as this portion is concerned, it is same like AS, almost same. Okay. So guys, first one is fair value approach, or we can also call it as a gross approach. We can also call it as a gross approach. Gross approach. The second one is known as a nominal value approach. Nominal value. What is meant by nominal value? Sir, for taking this asset, for taking this machinery, the entity has not incurred any cost. Any cost. Then what will be the accounting entry? What will the accounting entry? Machinery account debit to income. 1 rupee at 1 rupee. Okay. Sir, the company has incurred only, let's say, 10,000 rupees on registration of machinery. Apart from that, no any cost has been incurred. Only 10,000 rupees has been spent. Then accounting entry will be machinery account debit 10,000 to bank 10,000. Okay. So nominal value. So if the machinery is coming at 1 rupee or 10,000 rupee or at a nominal value, of course, there will not be any depreciation in the P&L and there will not be any income in the P&L. Or let's say if the machinery has been recognized at 1 lakh rupees, so 20,000 rupees has to be recorded in the P&L as a depreciation every year. Okay. So I hope you guys are clear on the fair value approach and nominal value approach. And once it is recognized on a fair value approach and nominal value approach, then how this accounting will happen. So you have also understood the accounting. Yeah. The asset has to be depreciated over the useful life. The grant has to be amortized over the useful life of the asset on a straight line basis, on a systematic basis. Okay. Yeah. Is it right? Can I have some 5-10 confirmation, please? Are you guys comfortable so far? Are you able to understand what I'm trying to communicate? Yeah, thanks, Sobit. Thanks, Ahana. So non-monetary government grants are recognized either at fair value of the asset and the grant, or it has to be recognized where asset and grant at a nominal amount. Asset and grant in a nominal amount. Okay. Clear? Great. Yes, Shraddha, you are right. Why there should not be any income in P&L because not paid anything, right, sir? Yes. Yes, Shraddha, you are right. Okay. So Shraddha, concept is either you have to recognize at fair value, like in the first case, what we have done, machinery account debit to deferred government grant. And the second, if you want to recognize this, so of course, since you haven't paid anything, so there should not be any P&L impact. Na? The machine has to be depreciated over a period of 5 years. Okay. So if you are going on a fair value approach, and if you are going on a nominal value approach, in that case, you have to recognize the machinery at nominal value, and the counter leg is the other income. Okay. Thanks, Tejal. Clear? Yeah. A Limited, now we'll do a case study on this, then we will have a break of 10 minutes. A Limited wants to establish a manufacturing unit in a backward area and requires 5 acres of land. Okay. The government provides the land on a leasehold basis at a nominal value of 10,000 per acre. So guys, the company is operating in a backward area and the company requires 5 acres of land, 5 acres. And the government is providing this 5 acres of land at a 10,000 rupees per acre. 10,000 per acre. The fair value of the land is 1 lakh rupees per acre. The fair value of the land is 1 lakh rupees per acre. Okay, 1 lakh rupees per acre. This is the fair value. 1 lakh rupees per acre. Calculate the amount of the government grant to be recognized by the entity. So guys, it is a non-monetary grant. Okay, so the value is 1 lakh rupees per acre and the government is charging the nominal value at 10,000 rupees. So what is the, so how we can recognize this grant? There are two approaches. One is fair value approach, the second one is nominal value approach. If we will go by the nominal value approach, then what will be the accounting entry? What will be the accounting entry? If we will go by the nominal value approach, the accounting entry, going by the nominal value approach, the accounting entry will be land account debit to bank. To bank, of course, we are paying 10,000. So 10,000 rupees per acre, 10,000 into 5, 50,000. So we are paying nominal value and going by the nominal value approach. So asset has to be recognized at nominal value and grant has to be recognized at nominal value. I mean to say, when I say nominal value, it means whatever actual money the company has incurred, it has to be, the asset has to be recognized at that value. Simple. Okay. Second, so same like Ind AS, same like accounting standard. Second is gross approach. When I say gross approach, it is a fair value. What is the fair value, guys? What is the fair value? The fair value is 5 lakh rupees. How come it? How has it come? Land account debit. The fair value is 1 lakh rupees per acre. So asset has to be recognized at 1 lakh multiplied by 5. 5 lakh. And how much money has been paid to bank? Tejal, how much money has been paid? So 10,000 rupees has been paid. 10,000 multiplied by 5. 10,000 has been paid. So it's coming out at 50,000. You know, 50,000 we have paid. So how much benefit the company has received to deferred government grant, to deferred grant? How much? 90,000 rupees per acre benefit has been received. Okay. The fair value is 5 lakh rupees. The company has paid 50,000 rupees. It means the value of the grant is 4,50,000 rupees. The value of the grant is 4,50,000 rupees. Clear? Is it clear, guys? I hope it is clear to all of you. Yeah. Any problem in this particular case study? Let me know if you have any problem in this particular case study. So we have solved this case study with the help of gross approach as well as net approach. When I say gross approach, fair value approach. When I say net approach, it is a nominal value approach. So A Limited will recognize the land at fair value of rupees 5 lakh and 4,50,000 as a government grant. This government grant should be represented in the balance sheet by setting up the grant as a deferred income. And this deferred income has to be amortized over a period. Okay, let's say the period over which the leasehold life is there. Okay. Alternatively, the land may be recognized by A Limited at a nominal value of rupees 50,000. Okay, which is 10,000 multiplied by 5. Shraddha is asking, sir, in nominal value method on 50,000 depreciation charge. Shraddha, since it is a land, but if it is a leasehold land, okay, then of course this land has to be shown as a right to use asset. And whatever leasehold life is there, the depreciation has to be charged over a leasehold life. Okay, you're right. You're right, Pulkit. Is it clear, Shraddha? So guys, it's 8:30 now. Let's have a break for 10 minutes. And if you have any query, please post your query in the Q&A section. And after break, I'll take that query and I'll take the session forward. Okay. So we have discussed the accounting of non-monetary government grants. We have discussed the accounting of even though the grant related to asset as well. Okay. If the grant related to asset is there and the government is giving a money to the company, in that case, the grant has to be shown as a value, like in my example, 20 lakh was there. So 20 lakh has to be shown as a deferred government grant on the liability side, and it has to be amortized over a period of useful life of the asset in the P&L on a systematic basis. Second, the asset has been shown at a gross value, like 50 lakh. The second, the grant can be reduced from the cost of the asset. So 50 minus 20 on 30 lakh, the asset is going to be recognized. No income will be there since the grant has been reduced from the cost of the asset, and the net, this is known as a net approach, and the net depreciation has to be shown in the P&L. From both the approaches, the answer will be same, like 3 lakh rupees in my example. Okay. In this example, the standard talks about the fair value approach. If the company is providing, the non-monetary asset, the company is providing non-monetary grant. So either you can go by the nominal value approach, or you can go by the fair value approach. Okay. So coming to the presentation, we have discussed this part. If grant is related to assets, in that case, the grant has to be shown as a deferred income, as a deferred government grant in the liability side, and the asset has been shown in the balance sheet on a gross basis. Okay. Either presented in balance sheet by setting up grant as a deferred income. Okay. So asset will be there at a full value, at a gross value, and grant will be shown. If the asset is free of cost, then the full value. If the actual money has been received or the grant has been agreed for a fixed amount, then that fixed amount. Okay. For example, 50 lakh rupees building, the government has given free of cost. So in this case, grant and building both have to be shown as a 50 lakh rupees. Second example, government has given 20 lakh rupees for that building. So a building has to be shown at 50 lakh, grant has to be shown at 20 lakh. Okay. So this is a gross approach. What is a net approach? Or deducted from the carrying value of the asset. Okay. The second approach is if the grant is given, if the non-monetary asset is given at free of cost, so it should be at nominal value like 1 rupees. But if the government has given some money due to the purchase or acquisition of that asset, so from the carrying value of that asset, like 50 lakh rupees, this 20 lakh rupees can be reduced. Okay. So this is known as a deductive approach. So I can call this approach as a gross approach. I can call this approach as a net approach. Okay. Is it sounding good? Is it sounding good? Yeah. Is it sounding good, guys? Grant related to income. If the grant related to income means grant relating to expense. Okay. So government is giving you grant either due to the past compliance of some condition related to expenses or the future compliance of some condition related to the expenses. If grant is related to income, then it has to be separately stated as a other income under P&L. Has to be stated as other income under P&L or deducted in reporting the related expenses. Deducted in reporting the related expenses. Okay. For example, the government has declared that if the Max Hospital Limited will vaccine at least 5,000 patient in a particular year, then we will reimburse the money. Okay. So for example, the cost of this 5,000 vaccine is 50 lakh rupees. So either Max Hospital can show this 50 lakh rupees as other income, and the expense on vaccine, for example, it is a 45 lakh rupees. So 45 lakh rupees as an expense. The second one is the Max Hospital can reduce the expense as a zero. 45 lakh minus 50 lakh, negative 50,000. So this negative 50,000 will go to the other income, but the expense will shown at a zero value. Okay. Again, it is known as a gross approach. It is known as a net approach. Okay. Shraddha, your query is not clear. Can you please elaborate your query? Shraddha is asking, sir, in second case, entire 5 lakh is depreciated and 4.5 lakh is reversed over the period. So to the extent of 50,000, yeah. Yes, Shraddha, you are right. Okay. Because we have actually paid 50,000 and hence 50,000 impact will go to P&L. Yeah. Clear, guys? I hope this is clear to everyone. Now we are discussing a comprehensive case study for both the approaches. Alok Limited receives 15 million from a local council. Okay, it is a local body. 15 million means 1.5 crores to set up in a particular area. The money is paid specifically to contribute to the 80 million cost of a new factory. The factory is to be depreciated over a period of 40 years. Okay. So friends, what information is given here? The cost of factory. The cost of factory is 80 million. Okay. And the grant is not completely, the government is only providing some support, 15 million. Out of 8 crore, the government is providing a relief of 1.5 crores. Okay. And the life of the factory is also given. The life is 40 years. Required, how the items will be dealt within the statement of profit or loss and balance sheet at the end of year 1 if the grant is to be treated as deferred income or a reduction in the carrying amount of the factory. So first it is talking about the gross approach. Second, it is talking about the net approach. So what to do? Guys, tell me what to do. Going by the gross approach, the grant has to be shown as 15 million. The asset has to be shown at 80 million. Am I right? The grant has to be shown at 15 million. The asset has to be shown at 80 million. Okay. The asset has to be shown at 80 million. So in this case, gross approach. Asset 80 million. Liability means grant 15 million. Okay. Now on this asset, the life is 40 years. On this asset, depreciation is going to be charged every year. 80 by 40, 2 million. 2 million means 2 crore, 2,000. And what about this grant income? This 15 million has to be charged over a period of 40 years. It has to be not charged, has to be amortized. So 15 divided by 40. What is comes out at 15 divided by 40? 15 divided by 40. It is 3,75,000. It is 3,75,000. Okay. So it is 0.375 million. 3,75,000. So friend, going by the gross approach, the depreciation should be charged at 2,000. 2,000 means 2 million. And the income, so here it is an expense, here it is an income. And the income is 3,75,000. 3,75,000 income. In the balance sheet, at the end of the year, of course, we are showing this accounts at the end of the year. In the balance sheet, since we have recognized this at full value, 80 million. So 80 minus 2, 78,000 million. 78 million has to be shown as a asset. Okay. And the remaining amount, 15 million, 1.5 crore minus 3,75,000. This has to be shown as a liability, deferred government grant, deferred income. Okay. And again, this 3,75,000 will be amortized in the next year. So the amount which has to be recognized within 1 year has to be shown as a current liability, 3,75,000. And the remaining 14.25 million, 14,250,000, 14.25 million, 1.425 crores has to be shown as a non-current liability. Simple. So what we have done in P&L, we have depreciated the factory over the useful life, 2 million. Then whatever grant we have been received or going to be received, 15 million, divide by the useful life of the factory, 40 million. So 3,75,000 has to be recognized as a income. In the balance sheet, the asset has to be shown as a depreciated value, 80 minus 2, 78 million. The remaining grant, 14 point, whatever is there, 15 minus 3,75,000. So the amount which can be adjusted within 1 year has to be shown as a current liability. The amount which has to be adjusted in the next 38 years. 1 year has gone, within 1 year we have taken, and for the next 38 years we have shown as a non-current liability. I hope it is clear to everyone. Yeah, please remember gross approach, net approach. Going by the net approach, what will be the cost of the asset? So cost of the asset is 80 million. What is the grant received? Grant 15 million. What is the net cost in the hands of the company? 65 million. What is the life? 40 years. So what is the depreciation? 65 divided by 40. It is coming out at 65 by 40. It is coming out at 1.625 million. So since already grant has been reduced from the cost of the asset, so net 1.625 million will be charged as a depreciation in the books of accounts. Here, if you do the total of this, it is also coming at 1.625, 1,625,000. Okay. And in the balance sheet, the net value of the asset was 65 lakh minus 65 million minus 1.625 million is the depreciation. So the net value is 63.375 million. I hope this is clear to everyone. I hope this gross approach and net approach is clear to everyone, guys. Guys, tell me if you have any challenge. Can you quickly confirm so that I'll take it forward? I'll move forward. Thanks, Ahana. Yeah. What about you, Fernandez, Vijaya, Shraddha, Tejal? I hope it is clear to everyone, guys. So we have discussed grant related to assets. Okay. We have discussed grant related to assets. Now we are discussing grant related to income. Okay. So this is known as a gross approach. This is known as a net approach. The government of Haryana. So in the income approach, we have discussed that the grant either has to be shown as an income and the related expense has to be shown as an expense, or the grant can be reduced from the expense. Okay. The government of Haryana reimbursed the OPD expense of Kedanta Hospital, which is treating COVID patient amounting to ₹1 crore pertaining to FY 1920. Advise the treatment of such support from the government. So guys, is it a grant related to asset or is it a grant related to operating expenses? Is it a grant related to asset or grant related to expense? Yeah, this is a grant related to expense. This is a grant related to expense. Okay. And what is the treatment? How it has to be shown? So there are two alternative treatment. 1 crore can be shown as an income in financial year 2019-20, and the related expense can be shown as an expense. The second, this 1 crore can be reduced from the related expenses. If the related expenses are lower, then the buffer part will go to income. Otherwise, the completely 1 crore should be adjusted from the expense in the expense side. Okay. So such amount is required to be recognized in P&L either as an other income or it will be reduced from the OPD expenses. Yeah. Clear? Next example or case study. A Limited received a government grant of ₹10 lakh to defray expenses for environmental protection. So A Limited is putting some expenses, incurring some expenses to protect the environment. Okay. And that is why the government has given a grant of ₹10 lakh to the company. Expected environmental cost to be incurred is 3 lakh per annum for the next 5 years. And what is the expected cost? this expected cost is 3 lakh per annum for the 5 years, means 15 lakhs. Okay, and the government is giving 10 lakh. How should A Limited present such grant related to income in the financial statement? Tell me. So in this case, first of all, this 10 lakh has to be deferred and amortized over a period of 5 years. Second, so A Limited, either this 2 lakh rupees has to be recognized as other income every year, so that in the 5 year 10 lakh will be recognized, and this expenses of 3 lakh has to be shown as expenses in every year. Second alternate treatment, so from 3 lakh rupees of expense, this 2 lakh will be reduced and 1 lakh net expense is required to be presented in the P&L. Okay, and net, if I go by the net P&L impact, so in the 5 year, I am recognizing 2 lakh rupees every year as other income, total income 10 lakh. I am recognizing 3 lakh expense every year, the total expense is 15 lakh. In the 5 year net P&L impact is 5 lakh. The second treatment, I am reducing 2 lakh rupees from 3 lakh rupees every year and the net expense is 1 lakh. So the net P&L impact is 5 lakh in the 5 year. So same treatment. Yeah. I hope it is very easy, very simple to understand. This is a very simple standard. Okay. Now we are discussing a very important part of the standard, and let me tell you, this is a very important part of the standard. And when this concept was asked in the examination, at times students make mistakes. Okay. So let's understand this concept very critically, very beautifully. So a lot of students were saying, sir, for example, the condition was related to 5 years, 6 years, 10 years. And if the entity will default in compliance, in compliance of the conditions, of course, the government grant will be repaid. Sir, then how this will be treated in the books of accounts? Okay. So first of all, if there was an error, for example, there was an error in the estimation. The company in the first year, second year, third year, the company was saying we are reasonably sure that we will be able to comply with the condition and the grant is recognized. But there was a fraud because the entity wants to recognize the grant income. The entity wants to protect the P&L, and that is why they have demonstrated in such a way. But the entity was neither taking any efforts for the compliance of the condition, or the entity had just prepared the artificial document. So of course this is an error, and let me tell you, error includes fraud also. Okay, when you read Ind AS 8, it says that error includes intentional mistake as well as unintentional mistake. So error includes mistake and frauds both. Okay. So guys, if it is an error, then as per Ind AS 8, the account has to be retrospectively restated. The account has to be corrected. But sir, if it is not an error, for example, the company was reasonably assured that yes, it will be complied. In the second year, it will be complied. In the third year, the COVID has came and the government does not want to provide any relief. Okay. And due to this COVID, the company is not reasonably sure that the company will be able to comply with the condition. Unavoidable circumstances has happened. Then what to do? Whether we need to retrospectively adjust or retrospectively restate our books, or we need to treat this thing as a prospective. So standard says that if in future the grant has to be repaid due to non-compliance of the condition, it has to be treated as a change in estimate. And when I say it has to be treated as a change in estimate, it has to be applied prospectively. It has to be applied prospectively. Okay. It has to be applied prospectively, right? It has to be applied prospectively. Retrospective restatement is not required. Sir, but you have told if there was an error or fraud, of course, that was a different complications. If there was an error or fraud, then accounts is required to be restated. Okay. Now, we understood that this is not a change in policy. This is a change in estimate because the circumstances has been changed. The facts has been changed. And that is why it is required to repay the government grant. The company was earlier sure that the condition will be complied with, but now the entity is saying we are not sure whether we will be able to comply with the conditions or not. So guys, now we have so far understood the grant in two manner. One is revenue nature of grant, second capital nature of grant. When I say capital nature of grant, there is no such word known as a capital nature of grant. It is asset related grant. Okay, so if there is a income related grant, so let me make you guys understand with the help of an example in the Excel sheet. So guys, government has given a grant, case 1. I hope my screen is visible, my Excel file is visible to everyone. Please confirm if the Excel file is visible to everyone. Whether Excel file is visible to everyone, guys. Case 1. To income. Okay. Grant is related to income. So if the grant is related to income, okay, if the government has given a grant, for example, the government has given a grant related to expense, and the value of the grant is, 10 lakh rupees. Okay, so this is a deferred and this is a deferred grant. And this grant is for 5 years. Okay. In the first year, in the second year, the company has recognized income for rupees 2 lakh. In the second year, the company has recognized income for rupees 2 lakh. And the balance in deferred grant account is, at the end of first year it was 8 lakh, at the end of second year it was 6 lakh. At the end of third year, it was, the company has defaulted in compliance and entire grant is refundable. Then what will be the accounting entry? So standard says that when the entire grant is refundable, first of all, you have to see what is the balance which is outstanding in the deferred grant account in the liability. So first of all, you need to adjust from there. Deferred grant account, debit. How much? 6 lakh. Okay. Then to bank, how much money is payable? To bank or to government grant payable, whatever it may be. To bank, credit 10 lakh. And where the difference will go? So of course, what is the difference? This 4 lakh rupees, this difference will go to other expense. Four lakh. Okay. I hope this accounting entry is clear to everyone. Guys. What about the accounting entry? I hope you have understood. I hope you guys have understood this part. Okay. So if the grant is related to expense, I mean to say the grant is relating to income, then whatever unamortized deferred credit is lying in the liability side, you have to adjust from that. and then whatever balance is there, you have to recognize immediately in P&L. You have to recognize that part immediately in P&L. Okay, clear? Any problem? Fernandez is asking, sir, what about the interest earned on the grant? How to account it when accounting estimate is changed? So Fernandez, first of all, you need to see. I understood your query. You are saying that, sir, if the 10 lakh rupees of grant has been received, and for example, I have to incur an expense of 2 lakh every year. So of course, I'll deposit the balance money into my investment accounts, okay, and I'll receive an interest over that. So that interest will go to the income. The interest will go to the interest income or in the P&L, okay. And you need to see the documentation also. If the document says that, if the government grant condition says that whatever money you have earned on this grant, that money is also refundable. In that case, you have to refund the interest part also. For example, in the last 2 years, you have received an interest of 50,000 rupees. Of course, you must have recognized the income also, like a bank account debit to interest income account. Okay. So in that case, if the documentation says that, if the grant condition says that whatever money you have earned on our grant, so that is also refundable to us if you will default in compliance of the condition. If it says that, in that case, this interest money is also refundable. Accounting entry will be interest expense account debit or other expense account debit to bank account. Okay. But if the documentation is silent, in that case, you are not required to do anything. So till the time when you have used the money, you have earned the interest, you have just recognized interest as another income in your P&L account and you have enjoyed the money. Okay. So it depends upon the document. I hope it is clear, Fernandez. So guys, grant related income concept was very simple. Now I am moving to grant relating to asset. If there is a grant relating to asset and that grant is getting refunded, okay, so I am coming to that. So friends, the first case was grant is related to income. The second case is case 2 is related to asset. Now it is very important to see which approach has been taken. So for understanding the refund, for understanding the accounting of repayment of grant. For understanding the accounting of repayment of grant, so it is very important to understand. That which approach has been followed. Okay, I'll take an example. Cost of machinery, cost of equipment, ₹10 lakh. Okay, life of the equipment, five years. Okay, grant received, let's say 6 lakh. Okay friends, so grant received 6 lakh. Now okay, so the condition was the entity has to produce at least 10,000 units every year consistently five years. Okay, otherwise the grant will be repaid in full in the year in which the condition was not met. Okay, I hope you have understood this case study, or you have understood this question, and you are a bit comfortable about this particular case study. So the cost of equipment is 10 lakh, the life of equipment is 5 years, the grant received is 6 lakh. Okay, and the company has defaulted in third year. So guys, first of all, it is important to understand whether the entity is following gross approach or net approach. So first of all, we are going by the gross approach. Okay, and we have to do the accounting in the first year and second year. Then we will go by the net approach. Okay, in the gross approach, asset has to be shown at full value, which is 10 lakh, and the grant has to be shown as full value deferred grant, and in the liability side 6 lakh. Clear? Asset 10 lakh, grant 6 lakh. Now in P&L, for the first year, so what is the P&L impact? So we need to see in the first year, let's say first year, second year, first year, second year. When I say P&L, when I say depreciation, what is the depreciation? In the first year, the depreciation is 10 divided by 5. In the second year, the depreciation is again 2 lakh rupees. Okay. In the first year, the income will be, this grant has to be amortized over a period of 5 years. 6 divided by 5, 1.2 lakhs. In the second year, same, 6 divided by 5, 1.2 lakhs. Okay. So this we have to do the balance in asset account. In the first year, the balance in asset account will be 10 lakh minus depreciation 2 lakh. Balance in deferred grant, it is 6 minus 1.2 lakh. Okay, 6 minus 1.2 lakh. Yeah. In the second year, the balance in asset account is 8 minus 2. In the balance in grant account is 4.8 minus 2. So now we have to discuss about third year. But friends, when we are reaching to third year, there is a default in the condition of output, and this grant has to be payable in full. 6 lakh rupees has to be paid. 6 lakh rupees has to be paid. Okay. Clear, guys? So this, in the third year, the money has to be paid. So standard says that first of all, what will be the accounting entry? We have to, let's say we are not paying immediately. In that case, we have to say that to grant payable to government, to grant payable account. And what is the payable? The payable is 6 lakh. Of course, it has to be paid in full. So whatever money we have received, we have to pay it. Grant payable 6 lakh. And standard says that if you have any balance in deferred grant, unamortized balance in deferred grant, that unamortized balance has to be, the balance in asset, the balance in grant is 4.8 minus 1.2, 3.6. Then whatever balance is available in the unamortized government grant, that has to be debited. So deferred grant, this deferred grant will be debited, debit. By how much amount? So 3.6 balance is available as of now. Okay, 3.6 is available. Now, the standard says that since you have taken a gross approach and you have shown the asset at full value, you have shown the asset at full value, at fair value. In this case, whatever difference is there, it will be debited as a other expense in the P&L. It is debited as a other expense in the P&L. Okay. Because you have recognized whatever you have recognized as an income, 1.2 plus 1.2, 2.4. And if you will, you know, just reduce this 3.6 from 6, it will comes out to 2.4. Okay. So this will be the balancing figure. So this will go to other expense. This will go to other expense. Okay. So guys, I hope you have been clear about the accounting entry. So this accounting entry is same like we have, you know, discussed in this asset, this income accounting entry, payment of grant relating to expense accounting entry. Yes, it is same. It is same. So first, whatever balance we have, you know, whatever balance we have in deferred grant, we have debited that. Grant has been payable by full amount, and you know the difference will go to expense account. Sir, when we'll pay grant, what will be the accounting entry in that case? Grant payable account debit, payable debit to bank account. 6 lakh, 6 lakh. Okay. Yes, Radha, the balance will be 3.6 lakh. Yes, that was my mistake. Okay. Clear, guys? Preeti, I hope you have also received your answer. If you are not required to pay immediate cash, you have to show it as a grant payable account. Okay. And whenever you will pay cash, you will do the accounting entry grant payable to bank. Clear? Now, guys, the second case is very important and it is tricky. It is tricky one. So we are going by the net approach. When we are going about the net approach, at what value will recognize the grant? 0. At what value will recognize the asset? Cost of asset. 10 less grant. How much? 6. Net value of the asset. Okay, it is 4 lakh. And now what will be the accounting entry in the first year? In the first year, what will be the depreciation? 4 divided by 5, 0.8. You will see this impact is 0.8 only. When you reduce 1.2 from 2, the net P&L impact is 0.8 only. If you will see here, the net P&L impact is 0.2. 2 expense, 1.2 income. So here it is also 0.2. Okay. Income will be 0. Why? Because the government grant is not recognized separately. The value of the government grant has been reduced from the value of the asset. So income is 0. In the second year, what will be the depreciation? 4 divided by 5, 0.8. What is the income? 0. Income is 0. Okay. Balance in asset. What will be the balance in asset? 4 minus 0.8 at the end of the first year. 3.2 minus 0.8 at the end of the second year. Okay. What is the balance in deferred grant? 0. Why? Because we are following a net approach. Right, guys? Any problem so far? Any challenge, any problem, please let me know. This is an important concept. And generally the question have been asked from the net approach in case of repayment of government grant. Yeah. So what to do in this case? In this case, standard says that. In this case, standard says that if the company is following, first of all, repayment of a grant related to an asset shall be recognized by increasing the carrying value of the asset or reducing the deferred income balance by the amount repayable, as the case may be. And the cumulative additional depreciation that would have been recognized in the P&L to date in the absence of the grant shall be recognized immediately in the P&L. What does it mean? Sir, we have not understood. So that is why I am solving this particular case study just to make you guys understand. So what to do now? Tell me. If the company is following net approach and this 6 lakh has to be payable at the end of the third year, then how to do the application of this particular thing? So first of all, friends, you need to calculate. First step, calculate depreciation if the grant would not have received. So if the grant would not have received, then what will be the cost of the asset? What will be the value of the asset? In that case, value of the asset was 10 lakh, no? Of course, this 10 was there, same value. Okay. And then what was the depreciation? What was the depreciation per annum? Of course, it is 10 by 2, 10 by 5, 2. Basically, it is 2 lakhs per just a minute, 2 lakhs per annum per year. Okay. So calculate depreciation if the grant would not have received. If the grant would not have received. Okay. Then the depreciation till the end of third year. What will be the depreciation till the end of third year if the grant would not have received? 2 multiplied by 3, which is 6 lakhs, of course. So the depreciation till the time of repayment of the grant, till the time of third year, it is 6 lakhs. It is 6 lakhs. Okay. So first you need to calculate depreciation, okay, which has been calculated if the grant has never been received. If the grant has never been received. Okay. Understood? Clear? Clear or not? Friends, are you clear on this? Yeah? Yeah. Step 2. Add the grant repayable cost of the asset in the cost of the asset. Add the grant repayable in the cost of the asset. Okay. So we need to repayable the grant in the cost of the asset. Okay. So guys, add the grant repayable in the carrying value of the asset. In the carrying value of the asset. In the carrying amount of the asset. What was the carrying amount at the end of the second year? What was the carrying amount? Carrying amount at the end of second year. What was the carrying amount? It was 2.4. It was 2.4. Am I right? It was 2.4 lakhs. Okay. And now we need to add the repayment of grant. Because if the grant would not have been received, of course, this will form part of the cost of the asset. Since we are following a net approach, in the first approach, we have already recognized our asset at a full value. But here, we have recognized our asset at a net value. And if this grant would not have been received, my asset is having a full value. So the standard says that at the time of repayment of the grant, whatever carrying value was there. So at the end of the second year, the carrying value was 2.4 lakh. So you have to add whatever you are paying back to the government. You will have to add that money in the carrying value of the asset. What is the carrying value of the asset? 2.4. What is the repayment of grant? It is 6. It is 6. Okay. So how much? What is the total? What is the total value? The total value is coming out at 8.4 lakh. It is coming out at 8.4 lakh. 8.4 lakh. So standard says that it is coming out at 8.4 lakh. Now your total depreciation till the end of the third year is 6 lakhs. And how much the depreciation has already been charged? Step 3. calculate additional depreciation to be charged in the year of repayment when the grant is repayable. Okay, in the year of repayment. So depreciation till the end of third year. Depreciation till the end of third year if the grant not received. Depreciation already charged till second year. Till second year. Okay. So the depreciation would have been charged at 6 lakh. The depreciation already charged. The depreciation already charged is how much? The depreciation already charged is how much? 0.8 in the first year, 0.8 in the second year. So it is 1.6. The depreciation already charged is 1.6. So how much additional depreciation which we are required to be charged? The additional depreciation which is required to be charged is 4.4. It is 4.4. Okay. So step 1, calculate depreciation if the grant would not have been received. It is 6 lakh. Okay. Then you are required to add the grant which is repayable in the carrying value of the asset. Why? Because we are repaying the grant. It means if we have not received the grant, of course this will form part of the cost of the asset only. Then we need to see how much excess depreciation is required to be charged. Okay. And then you need to calculate carrying value. So carrying value of the asset at the end of third year is equal to how much? 8.4 minus 4.4. 8.4 minus 4.4, and it is coming out at 4. It is coming out at 4 lakh. Sir, if we go by the gross approach, even in the gross approach, the carrying value at the end of the third year was how much? If 2 million depreciation has to be charged, 2 lakh depreciation has to charge every year. So 10 minus 6, 4 lakh carrying value would be there. So guys, in case of a net value approach, standard says that, very simple standard says that, in case of a net approach, you need to add whatever grant you are repaying, you need to add that grant in the cost of the asset, in the carrying value of the asset first. Second, you need to calculate the depreciation till the date of repayment of demand, the repayment of grant, and you need to net off from the, so basically first of all you need to calculate what could be the depreciation if the grant has not been received, then how much depreciation has been charged. So what is buffer there that has to be reduced from the net value, from the carrying value of the grant. Okay, understood? So this will be the carrying value. Now sir, what will be the accounting entry for repayment of grant in this case? The accounting entry will be, of course this grant has to be repaid. For example, the company is paying later. So what will be the grant accounting entry? Of course this 2 grant payable will be there. Of course 6 lakh has to be shown here. And debit will be, what will be the debit? What will be the debit? So debit will be the asset account debit. How much? Asset account will be debited by 6 lakhs. By 6 lakh. Okay. 6 lakh. Asset account debit to grant payable. Second entry. Depreciation account debit to asset account. To asset account or to accumulated depreciation account. By how much amount? 4.4 in the second year. This will go to P&L. These are the two accounting entries. Okay. Friends, I hope. Yes, Radha, you're right. Asset value must be increased and extra depreciation must be charged. Okay. Yeah. So guys, I hope you all are clear on this part. So let me quickly discuss my this repayment of grant concept I have discussed. Okay. So in case of an income, first you have to set off your unamortized deferred credit, then you have to charge to P&L. Okay. So quickly I'll cover this part also. Below facts are given for AG Limited and CFO needs an advice for treatment or refund in case of both the method. The cost of machinery is 15 lakh, life is 5 year, government grant received is 5 lakh, and later on this 5 lakh is required to repay to the government grant to the government in the year 2. So first method, cost of machinery is 15 lakh, deferred income 5 lakh. So depreciation in the first year is 3 lakh and the income in the P&L is 5 divided by 5, 1 lakh. So balance of machinery A at the end of year 1 is 12 lakh. Okay. Of course 15 minus 3. And the balance in government grant account is 5 minus 1, 4 lakh. And now in the second year this grant is repayable. So what we need to do? We need to set off this deferred government grant 4 lakh rupees. We need to debit this deferred government grant by 4 lakh rupees and credit the grant payable or bank account by 5 lakh rupees. And this 1 lakh rupees balance will go to P&L. Okay, this will go to P&L. Understood? And the machinery account will go as it is because it is at the full value. Okay, it is at gross approach. There is no change in the calculation of depreciation or value of the machinery. Going by the net approach, so cost of machinery was 15 lakh, government grant is 5 lakh, then total net value is 10 lakh. Closing balance at the end of first year is because this 10 lakh has to be depreciated over a period of 5 years. So 10 minus 2 is coming out at 8 lakh. Since 5 lakh was paid back to the government, this amount will be added to the cost of the machinery. Okay. So the first year carrying value was 8 lakh and when we add this 5 lakh, it will become 13 lakh. Okay. And the depreciation per annum in absence of government grant, if the government grant would not have been received and we have gone by the gross approach, then the depreciation would be 3 lakh every year. And in 2 years, it would be 6 lakh. But we have already charged 2 lakh rupees of depreciation in the first year. So additional, we need to charge 4 lakh. So what is the net carrying value impact after all the adjustment? This 13 lakh minus 4 lakh. 9 lakh rupees is the carrying value of the machinery at the end of the second year after all the adjustment. Okay. So we have done the similar case study in our Excel file in detail. Yeah. Guys, I hope you all are comfortable. Please tell me, shall I move on? Shall I move on? After charging additional depreciation, asset carrying value now is 4 plus 6 minus 4.4. Shraddha, it is not 4 plus 6 minus 4.4. Let me show my Excel file once again. Shraddha, if you see here, so what was the carrying value? What was the carrying value at the end of second year? What was the carrying value at the end of the second year? The carrying amount at the end of the second year was 2.4. 4 minus 0.8 minus 0.8, 2.4. And what is the amount which is repayable on the account of government grant? It is 6 million. It is 6 lakh. So 2.4 plus 6. 2.4 plus 6, it is 8.4. Okay. So it is 8.4. Now we have to charge a depreciation for the third year. So the depreciation for 3 years should be 6 lakhs. And we have already charged 1.6. So we need to charge 4.4 depreciation also. Then what will be the carrying value at the end of the third year? The carrying value at the end of the third year will be 2.4 plus 6 minus 4.4. Okay. Because this 2.4 is the carrying value at the end of the second year. This 6 lakh has been added because we are repaying the government grant. And the third year additional depreciation. And this is the third year additional depreciation. So additional depreciation for third year. It is a catch-up impact. This has to be reduced. Okay. So this is 2.4. This is 2.4 plus 6 minus 4.4. If you will see the accounting entry at the time of repayable of government grant is asset account debit to grant payable. So at the end of the third year, the carrying value in the balance sheet was 2.4. We have added 6 also, it become 8.4. Okay. Then we have done the accounting entry, depreciation account debit to asset account 4.4. So now it will become 4 only. Okay. So this is the third year accounting entry, third year. Shraddha, I hope you are clear on this now. Thanks, Tejal. Shraddha, is it clear to you? Yeah. So we have discussed the part of this government grant also. Forgivable loan. If the government has given a loan, okay, and after compliance of certain condition, if the government will waive the loan, then this will be treated as a government grant. This will be treated as a government grant. Okay. If the loan has been given at a below market rate of interest, then how to do this? So let me show you this part with the help of a case study. So guys, I'm just discussing a government grant which is related to a interest-free loan. Interest-free loan given by the government. Okay. And the same formula will applies to concessional rate loan also. Okay. Interest-free loan given by the government. For example, Government of Rajasthan has given an interest-free loan to AG Limited for rupees 10 lakhs. Okay. On 1st April 2016. The period of loan is 5 years. Okay. The market rate of interest is 10%. Advise the treatment in this case in light of provisions of Ind AS. Yeah. So guys, in this case, standard says that in this case, if the government has given an interest-free loan, this loan is a financial liability, and this has to be calculated as per Ind AS 109. Okay. And since the government has given an interest-free loan, the standard says that there is an element, the Ind AS 20 is also comes into picture, and the concession, this interest concession, this interest waiver or interest-free portion will be considered as a grant, and it will come under the picture of Ind AS 20. And Ind AS 20 says that the government grant is equal to proceeds from the loan minus present value of the outflows. Okay, minus present value of the outflows, okay, of the loan. So friends, in this case, okay, what will be the treatment and how the calculation will go on? First of all, if we need to calculate the present value of the loan, so how to calculate the present value of the loan? First of all, what will be the outflow? The outflow will be 10 lakh rupees, because it is an interest-free loan. So outflow will be 10 lakh at the end of 5 years. And what is the life of the loan? What is the period of the loan? Life is equal to 5 years. Okay, so it is written that 10 lakh at the end of 5 years. So how this present value of the loan will be calculated? It is 10 lakh 1, 2, 3, 4, 5. 10 lakh divided by 1 plus 10%. What is the rate of interest? The market rate of interest is 10%. So we need to calculate the fair value of the loan. So 1 plus 10% to the raise 5. to the power 5. Okay, so it is coming out at 62921. 62921. So guys, what is a government grant? Government grant is a proceeds from the loan minus present value of the outflows of the loan or fair value of the loan. H per Ind AS 109. So friends, present value of the loan or fair value of the loan is coming out at 62921. 62921. Okay. Now, what will be the accounting entry? What will be the accounting entry? The accounting entry will be bank account debit. Of course, proceeds are 10 lakhs. Bank account debit. How much? 10 lakh. 1, 2, 3, 4, 5. 2. Loan account. To loan account. 62921. Okay. 62921. 2. Deferred grant. 10 minus 62921. Okay. Is it clear, friends? 10 minus 62921. So this will be credited. This will be credited. Now I am preparing a loan schedule. I am preparing a loan schedule. Okay. So this loan account has to be treated as per Ind AS 109. As per Ind AS 109. And this has to be treated as per Ind AS 20. So friends, are you clear on this part so far? The government has given an interest-free loan for rupees 10 lakh, which is repayable after 5 years. The fair value or market rate of interest is 10%. Okay. So in this standard, it says that you need to calculate the government grant for this interest waiver or interest concession. Okay. So in this case, we have calculated the present value of outflow, and the present value of outflow, the money which we have to pay after 10 years. Okay. What is the value today? The value today is 62921. Okay. 62921. The value today is 62921. Clear? So it is 62921. So friends, the difference will go to the government grant. Standard says that the difference will go to the government grant. Clear? So now we need to prepare a loan schedule. I am talking about the entire accounting for the next 5 years. So when I say loan schedule, of course, in the first year, so 1, 2, 3, 4, 5. So what is the opening balance? What is the opening balance? Then your interest expense, then your closing balance. Closing balance. So what is the opening balance? Opening balance of the loan is 62921. What is the interest? The interest is 62921 multiplied by 10% in the first year. Okay. Then what is the closing balance? The closing balance is this one. The closing balance is 62921 plus 62,192. So the fair value, the interest has to be calculated at market rate of interest. Interest at the rate of 10%. Yeah. So I'm just doing this Ind AS 109 accounting, guys. You have already covered this Ind AS 109. Okay. I'm just repeating this accounting. In the second year, the opening balance is 683. The interest has to be charged at this particular amount, 10%. The closing balance is 683 plus this. Okay. Again, this will become your opening balance. You need to calculate interest on this at a rate of 10%. Your closing balance will be this one. Your opening liability will be this one. This is your interest. This is your closing liability. This is your opening liability at the end of 5th year. At the end of 5th year, you have to recognize an interest cost. And this is your amount which has to be payable at the end of the 5th year. It become 10 lakh. You have to pay 10 lakh. Okay. So this is the total interest in the 5 year which you have to recognize. Okay. Understood? 379,70079. This is the opening balance. And when you total this plus this, it will comes out to 10 lakh rupees. Okay. So what about, sir, 62921 we have understood. What about 379,079? So now deferred grant schedule. schedule. Okay. So in case of a deferred grant, the opening balance is 379079. Opening balance, other income, it has to be charged to other income on a systematic basis. Closing balance. So this has to be charged in the period of 5 years on a systematic basis, on a similar basis, consistent basis. The closing balance is 379 minus 75. Okay. This will become the opening balance now. Again, same amount is required to be amortized. Okay. This will become your closing balance. Same amount will be amortized in income. This will become your opening balance. Same amount will be amortized. Okay. So this will become 0. If you will see, we will recognize this other income as 379079. So what is the net impact in the P&L? What is the net impact in the P&L at the end of the 5th year? The expense is 379079. The income is 379079. But yes, on a yearly basis, there is a change in P&L. On a yearly basis, year-wise net. Yes, on a yearly basis, due to amortized cost concept, there is a impact in the P&L. So the expense is 62, the income is, so we'll do income minus expense, 75 minus 62. So these are the 5-year P&L impact. Okay. So here it is net gain. Again here it is a net gain. Again here it is a net gain. It is a net expense. It is a net expense. Okay. And this will become 0. Yeah. So friends, students, I hope you have understood the accounting of deferred government grant in case of this interest-free loan or concessional loan. Okay. Guys, are you clear on this accounting? Let me know if you have any issues. Let me know if you have any problem. Friends, let me know. Have you understood the accounting of interest-free loan? Guys, can you quickly confirm? Students, can you quickly confirm? Yeah. Tejal, Shraddha, Vijaya, Fernandez, Pulkit, Shobhit, Ahana, Radha. Thanks, Ahana. Thanks, Shobhit. What about others? Thanks, Himanshu. Any challenge, guys? This is a very important concept. Let me know if there is any challenge. Thanks, Tejal. So this, how we have done this, the interest-free loan accounting. So first we have calculated the fair value of the loan as per Ind AS 109. The fair value comes out at 629.21. Then we have reduced one of the proceeds and it has come out at, it has come as a government grant. And then we have charged interest on the loan, on the present value of loan, so that it will become 10 lakh. And we have amortized this 379,079 government grant on a systematic basis, on a consistent basis, on a straight line basis, so that this will become 0. Okay. This will become 0. So this is year-wise net impact. Okay. So Shraddha, when I say forgivable loan, so first I have talked about forgivable loan. For example, the government has given a loan, okay, and that was an interest carrying loan. The government was charging interest, for example, and after 5 years, the government has waived that forgivable loan. So in that case, whenever the government has waived the loan, it will become an income. Okay. So that was the first concept. The second concept is government is not giving a forgivable loan. Government is not waiving the loan. The government is providing an interest-free loan or a concessional rate loan. So it is not a forgivable loan. It is an interest-free loan. Okay. So the concept of forgivable loan was very simple कि गवर्नमेंट जब लोन माफ करेगी मैं उसको अदर इनकम में लेके चला जाऊंगा. Okay, but the second one is if government has given this loan at a lesser rate of interest or at an interest free or an interest free loan. In that case, how to do the accounting that I have discussed. Okay, forgivable loan अलग है, interest free loan और concessional rate loan अलग है. So government पहले केस में प्रिंसिपल का वेवर दे रही है, दूसरे केस में इंटरेस्ट का वेवर दे रही है. I hope it is clear to everyone now. Shraddha, I hope it is clear to you also. Yeah. So the benefit of a government loan at a below market rate of interest is treated as a government grant. The loan shall be recognized and measured in accordance with Ind AS 109. The benefit of the below market rate of interest shall be measured as the difference between the initial carrying value of the loan determined in accordance with Ind AS 109 and the proceeds received. So we have done a practical case study on this. Yeah. Clear, guys? Yeah, government assistance we have discussed. Assistance means the government is providing some support, and the assistance which cannot reasonably have a value placed on it. I have told you, if there is a value, if it is measured in a monetary terms, it is a government grant. If it is not measured in a monetary term, it is a government assistance whose disclosure is required. So its accounting is not required, its disclosure is required only. Okay. So the transaction which cannot be distinguished from normal trading transaction. For example, government procurement policy resulting in portion of entity sale. So let's say Shraddha has a company, she is selling to me, she is selling to government, okay, on a normal price. So again, this could be a way of a disclosure, but this is not a your kind of a government grant. You can say that government is supporting in terms of, let's say they are taking my 50% production. They are the major customer. Okay. So action by government designed to provide an economic benefit specific to an entity or a sector or an industry. For example, technical or marketing advice, government procurement, etc., etc. Okay. So only disclosure is required in case of a government assistance. As far as government grant and government assistance is concerned, the accounting policy is required to be disclosed for measurement and presentation. The nature and extent of grant recognized in financial statement, you have to disclose. For example, the grant was 10 lakh rupees and you have recognized it was for 5-year period. You have recognized 2 lakh rupees. So you have to disclose this. Indication of other form of government assistance. What could be the other form of government assistance? You have to disclose. If there are unfulfilled conditions, then you have to disclose it as a contingent liability. Comparison between Ind AS and AS. I have told you that AS 12 only talks about government grant, and this standard talks about government grants and government assistance. Okay. So AS 12 does not deal with the such government assistance. In case of a non-monetary asset, although there is no much change, so AS 12 says that the non-monetary asset given at a concessional rate should be accounted at the acquisition cost. And if free of cost, it is a nominal value. But in AS, it says that there is an option to value non-monetary asset received as a government grant, either at fair value or at a nominal value. Okay. Promoter contribution, no such concept in Ind AS, but there was a concept of capital reserve in accounting standard. Forgivable loans. So of course we have discussed there is a concept in Ind AS, no such guidance was there in AS. Loan at below market rate. Of course there is a concept in Ind AS. There was no such concept in AS. Okay. Yeah. So Premi is asking, sir, if any condition is given along with loan and the condition is not satisfied, then how to reverse loan if government asked to repay loan at the end of 3rd year along with interest? So Premi, in that case, for example, the government has given a loan. It was a forgivable loan and the government has said that after 5 years, if you have complied with such condition, then we will waive the loan. So the loan, initially the loan was there in the balance sheet. So you have done the accounting entry bank account debit to forgivable loan like a government grant. Okay. So in that case, in the 3rd year, if such loan is repayable, then what accounting entry you will pass? you will pass forgivable loan account debit to bank account, and you will, whatever interest you have to pay, that will go prospectively in the P&L. So whatever loss which have been incurred by the company, that has to be prospective, that has to be prospective, and that has to be prospective. Okay, and whatever impact is there, that has to be shown, that has to be charged to the P&L. Shraddha is asking, how can we differentiate between government assistance and non-monetary government grant particularly? Shraddha, generally what happens? When I talk about disclosure of government assistance, these are kind of a support in nature. When I talk about non-monetary government grant, these are kind of, the government is providing some equipment, providing some facility, providing some asset, providing some intangible asset. But when I say government assistance, it is kind of a support. For example, government is giving a technical advice, government is giving a market advice, government is providing a free access to the supplier portal, customer portal. Okay, the government is listed your name in their portal. So these kind of things are there as a government assistance. Kalyani is asking, sir, here we had considered interest free loan. Will the working change if the discounted rate of interest given? So Kalyani, first of all, the working will not change as far as fair value of the loan is concerned, because the standard says that the fair value of loan has to be calculated as per the market rate of interest. Okay, so the present value will not change, but the only thing is you have the closing value, the interest impact may change. Why? Because for example, the market rate of interest is 10% and the government has given it 6%. So you will pay 6% every year. If you are paying 6% every year, then your interest expense will change. The fair value of the loan will not change. Okay, have you understood this? Clear or not? Is it clear, guys? Clear, Kalyani? Shall I move forward? So Kalyani, let me show you in this case what happens if, let's say, instead of interest free loan, it is a loan which is given at a concessional rate, let's say 6%. So in this case, what will happen? So this is a interest has to be accrued at 10%, but the actual payment has to be shown at let's say 5%. Okay, the actual payment has to be shown at 5%. So in this case here, you have to show actual payment of interest. Okay, and when you show actual payment of interest at the rate of 5%, so of course this 62 minus actual interest, so this closing balance will go down. Okay, this closing balance will go little down, and of course this interest rate will also go down. Okay, clear, guys? I hope you have understood this. Yeah, any query? Shall I move forward? So comparison between Ind AS and IFRS, there is no difference between Ind AS and IFRS. Now I have some multiple choice question in my kitty. So I want to discuss these multiple choice questions quickly. So guys, initially we have discussed what is meant by government grant, and we have discussed the standard talks about accounting and disclosure of government grant and only disclosure of government assistance. Then we have discussed that some grant are out of the scope from this standard if the government is the owner or a promoter. In that case, if the government is contributing something to the entity, it is out of the scope of this standard. Then we have discussed if government is supporting to some industry sector or a company due to the price change, okay, it is outside the scope of the standard. If there is a grant related to agricultural asset, it is outside the scope of this standard and will be covered under Ind AS 41. If there is an income tax assistance given by the government, it is covered under Ind AS 12 and it is not covered under Ind AS 20. Okay, so we have discussed this. Then we have discussed what is government grant. So government grant is all form of assistance given by the government in terms of transfer of resources to the entity in return for compliance of some condition either in past or in future. Okay, if the government assistance does not or cannot be measured in terms of a value, it has to be disclosed. It will not require to be accounted for as a government grant. Okay, then we have discussed about the non-monetary grant, we have discussed the accounting, and we have discussed the government grant has to be recognized into the P&L either upfront or over a period of time. If the compliance has already been met, then it has to be recognized upfront. Otherwise, it has to be recognized over a period of time. Okay. Then we have discussed when there is a reasonable assurance that the entity will comply with the condition and the grant will be received, it has to be recognized in the books of accounts. Okay. Then we have discussed in case of a non-monetary grant, if the asset is free of cost, then asset or grant either has to be shown at fair value, okay, or it has to be shown at a nominal value. If the government is providing at a concessional rate, again, either it has to be shown at fair value, gross value, or it has to be shown at a net value, carrying value. If grant is related to income, other or let's say it's an expense, then either gross, or going by the gross approach, it has to be recognized in income and the expense is separately recognized, or it can be reduced from the expense as well. Okay. Then we discussed the repayment of the government grant, and we discussed the repayment has to be shown as an accounting estimate. Prospective treatment should be there. Okay. Prospective treatment should be there. And what can I say? And if it is related to income, then you need to see, is there any balance lying in deferred account? If any balance lying in deferred account, you have to reverse from that. Whatever balance still lying, whatever balance left, it has to be debited to P&L upfront. If it is related to asset, you need to see whether gross approach has been followed or net approach has been followed. If the gross approach has been followed, first it has to be net off from the unamortized deferred grant. Whatever difference is there, it go to P&L. If it is a net approach, then whatever government grant is repayable, it has to be added back to the carrying value of the asset. And you need to calculate, if this grant was never received, then what could be my depreciation so far, and whatever I have charged so far, the difference will be charged in the P&L in that particular year. Okay. So we have discussed this part. In case of forgivable loan, when the compliance will met and the entity is reasonably sure that the entity will comply with the condition, then this forgivable loan will be classified as an income, recognized as an income. In case of an interest-free loan or concessional rate loan, the loan has to be calculated at fair value in accordance with Ind AS 109. The difference between proceeds and fair value will be shown as a government grant. The government grant has to be amortized on a straight line basis or on a consistent basis or on a systematic basis over the life of the loan. Okay, understood? Let's move to the multiple choice question. Yes, Anup, you can ask, please. Coming to the multiple choice question, guys, it's a rapid fire, like it's a rapid fire questions. Quickly, you need to tell me the answer of these questions. Sorry. Which of the following is not covered by Ind AS 20 government grant? Employment grant, subsidized loan, forgivable loan, which is not covered? Which is not covered, guys? Which is not covered? Yes, tax breaks are not covered. You're right. This is not covered. So A is the right answer. This is out of the scope. This is out of the scope. This is covered under Ind AS 12. Government grant should be recognized when there is a dash that the entity will comply with the condition attaching to them and the grant will be received. Absolute certainty, reasonable assurance, a probability, some possibility. What is the right answer, guys? What is the right answer? Yes, it is reasonable assurance is the right answer. So B is the right answer. Question number 3. If an entity receives a non-monetary asset as a grant, this is accounted for at a market value, present value, fair value, nominal amount, either at fair value or at a nominal amount. What is the right answer? Non-monetary asset are either accounted for at a fair value or nominal value. Yes, E is the right answer. Yeah. Question number 4. Which of the following is not a correct treatment of government grant related to income? Present as a separate credit under a general heading, that is other income. Deduct from the cost of the asset. Deduct from the related expense. Tell me which is not the right option. Sorry. Which of the following is not a right option in case of a question number 4? Yes, B is not the right option. So right answer is B because the question is asking not a correct option. So this is not a correct option and the right answer is B. Sir, do we need to write para number also in the exam? You are not supposed to write para number in the exam. Okay. Guys, Tejal, A is not the right option, na? So A is the right thing. So either you can present the government grant under as other income. If the grant is related to expense or income, you can, if it is a revenue nature grant, either you can show it as a other income going by the gross approach, or you can deduct from the related expense. So these two are the right one. But this is asking which of the following is not a correct treatment. So deducting from the cost of the asset is not a correct treatment. It is talking about the revenue nature grant. Okay. If a grant must be repaid, it is an error, change of an accounting policy, new transaction, change in accounting estimate. What is the right answer, guys? If the grant has to be repaid, whether it is an error, change in policy, what is that? Of course, it is a change in accounting estimate. I have told you that if the grant is repayable in future year, it is a change in accounting estimate. The treatment is prospective, not retrospective. It is prospective. Question number 6. Which of the following, question number 6, which of the following is a correct way of presenting government grant related to an asset? Which of the following is a correct way? It is asking which is a correct way of presenting government grant related to asset. Tell me, what is the presentation of government grant related to asset? A, deferred income. B, credit to income in the period received. It is saying that, so whenever you will receive the grant related to asset, you will credit to income. C, deducting the grant from the carrying amount of the asset. C is saying you have to deduct the grant from the carrying amount of the asset. Of course, it is a right treatment. And of course, the first one is also a right treatment going by the gross approach. You need to show the asset at full value and you need to show the government grant also as a deferred income. So D is the right option, guys. Most of you are right. D is the right option. Yeah. Question number 7. When a government agency purchases shares in an entity, so government agency is purchasing share in entity. This is covered by Ind AS 20 government grant. True or false? Do you remember what are the items which were out of the scope? Do you remember that? It is not covered under Ind AS 20. It is out of the scope, guys. This standard does not deal with the government participation in the ownership of the entity. Okay. So this is out of the scope. So you remember, Pulkit, we have started with the government has, if the government has invested money in a company, if the government has invested money in the company, if the government is acting as a promoter, so this is outside the scope of the Ind AS 20. Question number 8. Which of the following disclosure is not a requirement of Ind AS 20? Accounting policy adopted for grants. Of course, it is required. Nature and extent of grant recognized in financial statement. Of course, it is required. Unfulfilled condition, contingency. Of course, it is required. Current grant application in process. The company has applied for some grant and it is in process. So it is not required. D is the right answer. So thank you so much, guys. I have completed Ind AS 20 and I have taken so many examples, case studies. You have to solve all the case studies from Institute study material and RTP for the better control and for the better revision. And if you have any query, you can write to me on caalokgarg@gmail.com or you can write to ICAI as well. Okay. I have also done the revision of this entire Ind AS 20. Let me know if you have any query. Otherwise, I would be happy to close the session. I would be happy to wrap up the session. So Anup was asking a query. So Anup is asking, sir, in case of Ind AS 116, suppose A Limited taken land for lease for 20 years and A Limited makes a tower and lease to this tower to another entity. How it should be accounted for, as a sublease or separately? Anup, the classic example is Bharti Infratel Limited, Indus Tower Limited. You can download the annual report of Indus Tower Limited. They are taking a land on the basis of lease, for example, 30 years, 25 years, 20 years. They are installing tower on that land and they are providing this tower to the telecom operator on a rental basis. So this tower lease has to be presented on a separate basis. It is not a sublease, it is a separate lease. Okay. Yeah, Anup, I have answered your query. Thank you, Radha, for the appreciation and feedback. So thanks everyone. So Anup, this is a separate lease. This is not a sublease. And the classic example is, you can see the annual report of American Tower Corporation. You can see the annual report of Bharti Infratel Limited, Indus Towers Limited. You will find this treatment. Okay. It is not a sublease. The industries are practically doing this. So thank you so much, guys. Thanks for the patience listening and making this session interactive. Stay happy, stay healthy, and stay blessed. Thank you so much.